Morning, everybody. How are we all doing? I'm back from holiday. Can anybody remember how to do this trading thing? Because I've completely forgotten. I'm still in a daze. I've been traveling for all day yesterday, so today might be a bit low-key, shall we say. How is everybody doing? All had good weeks? Morning, Ivan, Peter. Yes, good holiday, thanks. Morning, Amy. It's time, Christian. Tom, morning. Another Tom, morning. Danny, Francisco. Virginia, Kenley, same names in here. It's always good to see. Morning, Michael. Morning, Neo. Morning, JC. Morning, John. Yes, very relaxing holiday, but you need a holiday when you get back from a holiday because you travel for such a long time. Coming back from a holiday, you feel like you need a holiday. But anyway, hope you are well after the My Forex Fund broke down. Yeah, I've not really had a look at it much, but yeah, they're in trouble, aren't they? We're told off. So basically, it appears that they didn't have, well, it's difficult to know what's going to happen with it, but you obviously need to be regulated as a broker. And I suspect they were trading funds, but not regulated. I don't know. The thing with prop firms is 90% of prop firms don't fund you anyway. You're only trading demo all the time, and they're using the evaluation fees to pay the winning traders. So it appears that they did actually have funds, which is good because it means they were actually funding or copying certain traders, but obviously not regulated. So I don't know. We'll see what happens. But just use another prop firm, basically. Any other prop firm that is not using their own brokerage will be absolutely fine. So I didn't have any accounts live with my Forex funds. They do owe me some money, but I'll just have to wait until, I think it's, when is it, September? I can't type this morning. It's really one of those mornings. September the 11th. Yeah, so we'll have to wait until, excuse me, September the 11th to get some information on that as to what's going to happen. Their funds are frozen, but obviously any payments due will be looked at by the regulators and obviously will be passed. So they do owe me money, but well, I've got profit in an account, put it that way. I haven't done a withdrawal on it because it wasn't time for withdrawal. So we'll see. We will see. Anyway, where are you? What's the time? 5:02. So quick look at the news for this week. And then we'll have a look at the DAX. Let me just make sure I've got all my MT4 set up. Obviously, it's a bank holiday in the US today, so there's no trading in the US this afternoon. But we will trade the DAX this morning, and we'll do I need to do an analysis of everything, basically. All FX pairs. I need to look at all the indices. I need to look at everything this morning because obviously I've had a week off, so I need to get up to speed. Just make sure I've got all the accounts open correctly and they're all turned on, just in case I missed the open. Right. So this week we've got, in a couple of minutes, we've got GDP being released for the Swiss franc at the same time the DAX opens. So we might have a decent volatile move off the DAX right at the open because these numbers are going to come out as the bell rings. And the Swiss franc is obviously part of that European area, and obviously there's not a lot of stocks in the Swiss area that are in the DAX, so we'll see what happens. But so we got that in a minute. We got the Canadian and the US bank holiday today, and then we got Lagarde speaking this afternoon. That might be actually a mover because we are still waiting to hear whether or not they're increasing or decreasing interest rates for euro. So that might be a big mover this afternoon. So as far as bank holidays in the US go, we either get a huge volatile move during London or we get nothing. More often than not, it's totally flat. So don't expect masses of movement today, no ADRs, that sort of thing, because the US is closed. So we'll see what happens, but normally it's quite quiet on a US bank holiday. So, so there's no live room, obviously, this afternoon because there's no indexes to trade this afternoon. We've got the Aussie dollar rate tomorrow, which is expected to be a freeze. We've got GDP on Wednesday. We've got the Canadian rate, which is again expected to be a freeze on Wednesday. We've got the PMIs for the US dollar coming out. We've got unemployment claims for the US, which isn't as important as last week's unemployment rate, which was 3.8. So that's gone up, puts pressure on increasing interest rates further. So that's bearish US. And we've got the unemployment rate for the Canadian dollar on Friday. China CPI as well on Saturday, but don't worry about that. So there's two interest rates this week, and we've obviously got PMIs in there and unemployment rates as well. So it's fairly decent news week every single day of the week. Today is the quiet one. So hopefully today is probably going to be a fairly quiet moving day. Thanks for subscribing, whoever that was. Olusho, welcome aboard. Thanks for subscribing. Hello, everybody. I haven't said hello to Jerry, Paolo, Andres. Whipping post. My Forex funds case will probably drag out for months. Yeah, probably. Just use another prop firm. I'm going to put all my money into E8 now. I'm just going to buy E8 evaluations. E8 and my Forex funds are virtually the same rules and everything. So E8 will become my preferred one. They're a little bit more expensive than my Forex funds were, but effectively it's the same thing. So, and as you know, there's a lot of people have been talking about. We'll talk about it in a minute. Wait for the open to go, but yeah, I mean they're a broker. I don't know where the shock element is coming into people's brains with this, but they're a broker. They manipulate price. That's just what happens. That's why we don't use stop losses. Everybody uses a stop loss. Never going to make it in trading, are they? Because they're going to get manipulated constantly. So Fivers, you could look at them. Their rules are crap, though. Go and have a look on the website. I mean, I haven't updated this yet, obviously, because I haven't been here. But I'll update this and obviously remove my Forex funds from here. But the Fivers are on there. You could go and have a look at what they are. But the first month profit share on the Fivers is only 50% if you go with their instant, 80% on their high stakes. So the payouts are lower than some of the others. Compare. Use whichever one you want, really, at the end of the day. You're always going to have risk when you put any money into trading in any shape or form. Prop firms are no different to brokers. Every penny you put into them is at risk. But the thing with prop firms is you're putting in like $500. So it's not a lot, is it? Right, there's the open. No trades taken on pre-market. Pre-markets are skipped. Ranges are too tight. What am I trading? Am I trading 5? 1, 2, 3, 4, 5, 6. Sorry, bear with me one sec. Yeah. So I'm going to be all over the place this morning. Still like half asleep. So yeah, going to trade the open this morning. I haven't even got my pen out. Where's my pen? There we are. Yeah, going to trade the 5-minute opening range today. So 5-minute opening range, obviously at the moment, is going in there. So these pre-markets are a little bit tight this morning. We've got a tiny gap down potential to start with. I need to do an analysis on the stacks because I don't know where we are because I haven't been here for the last week. So let's have a quick look at where we are with the DAX. Have we got the gap fill done? No. So we've still got the gap fill in play here at the moment, which is 200 ADR, 150 to 200 ADR. We got close to it, didn't we? We came straight out of that propulsion gap again last week on Thursday. So we've got a tiny gap down. There's no gap ups to look at. So there's no gap ups from last week, I should say. So where did we go last week? Where are we? Friday, Thursday, Wednesday, Tuesday, Monday. We had an up week. So upside potential. We look like we are heading back up for the gap fill at the moment, don't we? So it looks like it wants to run long. We've got that gap down to do. So if we get a gap break to the downside down to fill that gap, I'd be watching for a bounce out of that gap. You've also got a nice support coming from Friday's low. Why is that not updated properly? Okay. So you've got Friday's low there. So downside potential, gap fill, and Friday's low, and then rally to the upside. But it might just go straight to the upside. We'll see. It looks like it's going that way, doesn't it? So we'll just wait for this 5-minute counter to go in. We've got 2 minutes. First time here, morning Phoenix. XRUpdate.news. So glad to have you back as well, XRUpdate.news. I'm glad to be back. I will be more awake tomorrow. I promise. We're in September now as well, so we're out of August, which is fantastic because it hopefully will mean the volatility will pick up. I managed to bank, I put it in the Telegram group just so I had a reference to what I banked last month, but I think I did 9 and a bit %. Last month. That's the wrong account. That one did 19% last month. Where are we? Wrong account. Oh, I've done 228 this month. Friday was the first of the month, yeah. $7,000. So yeah, just over $7,000 last month. So not bad. For August, anyway. August was very, very tricky. Right, 5-minute ORB is in. That's really big. This might be a tricky one today. Look at the volume. It's ticking so slow this morning. There's not a lot of volatility in the market today. So this might be a tricky one today. Maybe a little bit whippy. Two seconds to the candle close. Here we go. So there's the 5-minute opening ranges. Going to take a break of those today. So break to the downside on that 5-minute open. Watch that low. And then watch yesterday's low. So that's around about 1.5 hour or so on the 5-minute range to the downside. So that's potential downside profit. Somewhere between 1.5 hour. And then upside, obviously, we got gap fill. So that could go absolutely anywhere. So we'll see where that goes, but not a lot of volume is there today. Very, very slow. How was my holiday? Very good. What did I get up to? Lots. I did. Avoiding rain. There was a lot of rain. We had 3 days. I went to Croatia. We landed. It was 36.2 degrees. And then we had torrential thunderstorms, lightning like you've not seen, and thunder and all that stuff, for about 2.5 days on and off. And then it jumped back up to 30 degrees. So did some mountain biking, water skiing, paddleboarding, sailing, kayaking, eating, drinking, put on 5 pounds, you know, the usual stuff you do on holiday. Got a suntan, sort of. Probably can't see it because I haven't shaved. Anyway, yeah, usual holiday stuff. Very good. How did you check your account? I think twice. Everything I do is automated. So I wasn't trading the indices, obviously. The EA, you can see what I banked last week. So this is last week. So I banked 0.2 on that day, 0.4, 0.5, 0.7, 0.2. So I banked stuff. Swiss yen looks like it's getting ready to be banked as well. That's a new trade. I haven't got a TP on that yet. Should we go? That propulsion gap. Go for that propulsion gaps with an ADR. So yeah, just banked. You know, the EA basically takes all the trades for me, as you know. So it got me into some new positions. That Swiss yen, it got me into on last Thursday. Didn't even know I was in it. So yeah, I looked at it probably twice, I think, last week. But it's slow, isn't it? So it was August, so it's doesn't matter really in August because it's a massively slow month. Right, we've just tapped out the top of that 5 minute, but no break yet. I think it's going to be a slow one today. They just got rejected on that high. There we go. Slow because of US holiday? Yeah, it will be. Morning, AZ. We'll come back to that in a minute. Doesn't look like it's going anywhere, does it? So those figures for the GDP for the Swiss, for some reason, haven't updated. 0. So no growth, no retraction on the Swiss franc, on the Swiss economy, rather. Let me just quickly catch up on news from what happened after non-farm. Lower odds of another rate hike. Yeah, okay, cool. That's what I was expecting. So basically, because on Friday we had the rates, the unemployment rate going up. So obviously these are the key fundamental drivers: interest rates, inflation, GDP, and unemployment. If unemployment increases, as it has here, it puts pressure on further increases in interest rates. Basically, higher interest rates cause higher unemployment. Higher interest rates basically mean that businesses look to cut costs. Cut costs is your first thing is people. So as that has gone up, and that has gone up now, it puts the US in a very, very tricky situation because they want to increase interest rates to keep inflation dropping. However, by doing that, they increase unemployment, which puts pressure on inflation, etc. And it's this horrible spiral of trying to control these four elements. So from what they've just said on Friday, because I didn't look at the news on Friday after non-farm, it's more likely that we will have seen terminal rate coming through now at 5.5% on the US dollar. So there's a lot of currencies, as you can see now. Aussies did not increase last time. Euro didn't increase. Yen never does. New Zealand didn't increase. US probably will not increase next time round. Pound definitely will. We're going up to something like 5.75 to 6 is going to be our terminal rate. So we're approaching terminal rates here. If this goes up again over on the next report, that's going to really put them in a tricky situation. But at the moment, the US are likely to put a freeze on interest rate rises, which will be bearish for the US dollar, which will allow those indices to rally back up again. So I'll have a look at the indices in a minute. But I just wanted to see if there was any more talk after those were released as to what they might do. Doesn't look like there is. ECB talking about increasing rates. Nothing else. Right, good. Let's see if we've got the break yet. Yeah, long on the DAX. So long DAX. See if we can get a break to the upside. There's a gap fill in place, so it's probably going to be a tricky one today. We'll see. So where are we? That one. So yeah, so basically, US dollar, I would imagine, Friday we had a massive rally on the US dollar, look. Wow. 150 ADR on the US. Interesting. So typically you would say that that is going to be negative US, what happened on Friday. The unemployment rate should really put pressure on them not moving that interest rate, but obviously the market's had an opposite reaction. This doesn't look like the right reaction to that news, so I would suspect that this will probably all get undone this week. Not today, obviously, but yeah, so quite a big reaction there off the US. So I'm going to quickly start with the indices, and then I'm going to go through every FX pair. I need to quickly whiz through my positions as well and just see where we are. So indices. obviously DAX, we've got an upside gap fill to do. If that is going to be weak US dollar, we should be seeing indexes rise. And as you can see, obviously, with the DAX, it is recovering back up to the previous levels from this year, but we've completely stalled out. And that's the same story across all of these indices at the moment. So the Dow has managed to make new highs over the last couple of weeks, but pulled back. The S&P done the same, and the NASDAQ has had a little bit more of a rally actually than most. But so we're at a key level with all of these indices now as to whether or not we're going to go back into a bull calm market, and it looks to me like we are. So what I was looking for on the indices was basically to go back into this bull calm state and just pull back into the 2472s constantly and just keep that momentum going. So we have done it a couple of times, and this was the deepest pullback we had. So I was waiting basically to see if this market recovered and broke structure, which it has. So it looks like we're going to be bullish on the indices moving forward. We need to get this high taken out though and confirm that. So that would indicate a bearish US dollar. So we'll see what happens. But obviously Friday was kind of the opposite. So we need to see if that's a fake move or not. So if that is the case, I will start to get back into the S&P 500 and get back into my normal buy the dips, any RSI extensions, any pullbacks into the 2472 zone. Just keep buying it and buying it and buying it. There's a set file for the market reversal alerts EA that does that automatically. So we'll see what happens. We did obviously get a push on all of these over the last week, which is good. So we will see if we maintain that movement. DAX definitely needs more upside, obviously. But we'll see if this level here holds today. And then we can start that move to the upside. Let's quickly look at what oil's done. Oil has broken that 84. So we were looking at this 84 level on oil. So this previous low, which turned into our resistance, has broken. So yeah, $95 a barrel is next target, then up to the previous target of 107. So these are the targets set by Goldman Sachs and the big institutions and the hedge funds. That's where they are expected to be by end of year. We've only got 3 months now to go. So September, October, November, December. No, we haven't got 4 months to go to get to that $95 a barrel. They forecast that back here in December. And all we've done literally for the entire year is get stuck in that $65 to $85 range, basically. So we are breaking out of it now. So look for pullbacks to long oil. That looks good moving forward. So this is the sort of trades I would take off my support resistance account, which is the other one you just saw me done 19% or something last month. So this one, basically, what we were looking for was a pullback on that move to 38, which is there, which is exactly what we got. And then that bounce from 38. So we were looking for somewhere between 38 to 61, just normal standard pullback if we were going to break and go for that $95 a barrel. So off we go by the looks of things. So that's good. So buy dips on oil, basically. Let me just whiz through my pairs that I'm in. There's no ADRs this. Oh no, there is an ADR this morning. Aussie New Zealand. That's probably not an ADR. That's probably a broker candle. Let's have a look. The broker candle. So obviously this 5 minute, that's them basically spreading the swap there. So that's not an ADR hit. Not far off an ADR hit. So you could maybe take a mean reversion off of it, but that's not really an ADR. So there's no ADRs. Weekly, obviously, it's the first of the month. We're right, first of the week, Monday, obviously. It's the beginning of the month, so there's no monthlies to look at yet. RSI dashboard is flat. So we would expect the RSI dashboard to start to come to life this month. Now it's September. We get some more volatility coming through. We're out of summer trading. So we should get something kick-starting now. So let me just quickly whiz through my positions and just see, make sure I've got TPs on stuff, basically. So got a long on Aussie US, TP there. Fine. Swiss yen, I've just put a TP on that one this morning. Pound US dollar. Been stuck in this now for, I don't know, 19th of July. I got into the pound US. And it's literally just done that. Literally. You know, that's the whole of August, basically. We managed to put in 400 pips, which is basically 4 ADR in an entire month. Utter rubbish. And it's moved 4 times its normal average daily range in 6 weeks. Just shows you how crap August is. No movement whatsoever. So still long on that. TPs are up in this propulsion gap. Waiting for some US dollar weakness. Pound, we've got 2 more interest rates, possibly 3 interest rate rises to come. So that is bullish. We've just had this little bit of strength in the US dollar, which has held the pound down. So I still don't have a problem being long on this, just waiting for them to kickstart that move, basically. So TPs are all up there in propulsion. And US dollar CAD's the only other thing I've got on at the moment, which got 4 shorts. So TP on that one, because that was entered Friday. Stay for that propulsion, I think. So yeah, taking 2 nice profitable trades off of this one already. Same thing, basically, rinse and repeat. Might take it off if I get back down to break even on it, but I wouldn't expect to get a lot of movement today. So those are the only positions I've got on at the moment. See where we go from there. Right, I'm going to have a whiz through all pairs today, see where we get to. Finally went live, of course, 1 week you're away. Still pulled 2.9% in 3 days. Good job. Time to start Lambo shopping. Depends how big your account is. If you're trading $1 million account, you probably could have bought a Lambo last week, couldn't you? Be nice. You could at least buy a toy one. With what broker are you trading? Darwinex. Any broker, it doesn't matter. Brokers are relevant. Broker's a broker. They're all going to rip you off. Well, they're going to try. If you use a stop loss, they will. If you don't use a stop loss, they can't. Simple as that. But I use Darwinex for my longer term investment account. They're a really good broker, well established in the UK, and they only give 1 to 30 leverage, but I don't need anything more than that on the S&P account. So. Right, so we'll whiz through all pairs this morning, have a look at where everything is. Just need to remind myself of the fundamentals. So Aussie dollar, we're on 4.1 with no move. We've got forecast no movement this week, haven't we? Aussie dollar, yeah, so we're forecasting another freeze. CAD, we're forecasting a freeze. So inflation's coming down. Canadian dollar, we're on 5. So this is going to be their first freeze at 5. Inflation's going up. Unemployment's going up. Not good for the Canadians either. Swissies there. Euro, we did freeze. Don't think we're going to do that this time around, which is why I'm waiting for Lagarde this afternoon. Hopefully she's going to give us some indication as to interest rate rises coming up. We know we're going up on the pound. New Zealand's already frozen, and the US dollar is likely to freeze. Right. Okay. You left Robo Forex. No, this is Robo Forex. No, I'm still trading with Robo Forex. I've got multiple broker accounts. I trade with multiple brokers. This account's Robo Forex. Position trading, you need high leverage. So if you don't need high leverage, if you're just trading one instrument, you're scalping, or you've got an investment, long-term swing trading, you don't need anything more than 1 to 30 leverage. If you're position trading, you do need more than 1 to 30 leverage. Darwinex are a UK-based broker, UK regulated. So 1 to 30 is all I can get. But this is Robo Forex because this is position trading. Robo Forex are still my main broker. Not going anywhere today. Stuck at the minute. Got to watch this. It might just turn into a horrible hedge. What I might do, excuse me, target is these highs basically from Friday. If it can get there. If we get up to kind of 1.5 hour at this rate, if it goes this slow this morning, I want to be out of this really. There's a probable high likelihood we're just going to do a rotation day today because obviously the US markets are closed. There's going to be no sector purchasing going on in the Frankfurt exchange, so it's not going to be going anywhere because the US markets are shut. So if we can get a 1 hour out of it, I think I'll probably just take that today. Grab $500 or something. No volume, is there? Rubbish. Right. Bear 1 sec. Just trade over there. Okay, so we'll whiz through all the pairs. Yeah, so just to carry on, just talk about my Forex funds first of all. Morning, Mr. Lunary. Morning, Adimaru. You made another 10% last week. Good job. I take it that was on the opening range breakouts. You made that in position trading. Well done. Might be a bit over leveraged if you did though. So yeah, with my Forex funds, obviously what's happened with them, basically all brokers are in this industry to manipulate price. That's their job. Basically, their job is to make money out of your money, right? So whenever you take a trade, they take the opposite side of your trade. There's a lot of speculation as to what has been going on with my Forex funds. The CFTC have obviously put out a statement as to what they think is going on. There's regulatory issues. It seems that my Forex funds have obviously been taking opposite sides of trades, which is what most brokers do. So at the end of the day, it's just another broker. However, because they're one of the few prop firms out there that has their own brokerage, most of the other prop firms use third-party brokerages for executing orders. I think there's obviously regulatory issues that they haven't jumped through all the hoops. And brokers are allowed by law to execute your trades at any price that they deem fit, basically. So if I was to place an order up here, the sell limit, right? Right now, my broker could widen this spread on my account and take that trade for me and execute it up there. Yeah, I've signed a contract with my broker that says, I would like you to execute my orders at the best possible price that you can achieve for me, please. So when you place an order in the market there and you put a stop loss there and the price gets to there, your broker can spread and stop you out and price will never get to it. You sign a contract, look at your terms and conditions, look at the contract you've signed. One of the clauses in your contract, which is law, it's allowed in the SEC, says that you are allowing your broker to execute at the best possible price they can achieve. With my Forex funds, because you are not signing up for a brokerage account with them, you haven't signed a contract with them when you do an evaluation to say that you can execute orders at any price you deem fit. Okay, so I think that's where the SEC and the Canadian Trading Board's problem is coming in, is that they are seeing this fake broker, if you like, or this prop firm executing orders and manipulating price, right, without having signed a contract with you, which is against the law. So it's kind of a little loophole, I think, that has been weeded out in the prop firms that most of them, I think, won't be aware of. So you might find there's a big change coming through prop firms very shortly. But we'll see what happens with it. At the end of the day, it's a prop firm. There's thousands of them out there. It was the best. Now it's not. However, if they come back having ticked all the boxes, I will be going back to my Forex funds. I don't have a problem. I've been paid by them. Yeah, I don't care what they do, whether they manipulate. I only scalp, right? And when I place orders like this in the market, either manually or with an EA on the 5-minute time frame, if I ask for a price there and they execute me there, fine. If they execute me there, fine. If I have a stop loss there, price gets to here and they spread it and execute it, nothing I can do about it. Every broker under the sun does that. Yeah. So it's just a case of if the market pushes, the market pushes, and it doesn't affect me whether or not they are manipulating price slightly. I've accepted it. I've been trading for 15 years. I've had this happen to me for 15 years. Every brokerage I've been with does this. It's not unusual, but it's not been done by a prop firm before, and I think that's where the problem lies. So you're going to find, I think, a lot of these prop firms are going to come out of the woodwork now, having either they're going to swap brokerages, or they're going to suddenly do things a little bit differently. So we'll see what happens. But for the moment, as I said, all I'm going to do is I'm going to switch prop firms. I'm going to just switch over to EA. EA's the other firm that I use regularly. So I'll be just using these guys now for all my funded stuff. What the hell's going on there? I don't know what's going on there, but yeah, so that's all I'm going to do. Just switch over to EA for the moment. I haven't got any prop open at the moment, so I'll probably start a new one. I'm also trading futures as well with FTMO. So not with FTMO, sorry, with TopStep. For scalping, futures market is just as good. And everything you do through TopStep or through any company that is trading on the CME, they have to be regulated. Yeah. So you'll never have this problem with any prop firm that is trading through CME. Yeah. They can't access it without a license. So anyone you want to use, Apex, Take Profit Trader, TopStep, anybody trading futures, you won't have a problem. It's my Forex funds, basically. As you know, all these prop firms, all they're doing is they're selling you a demo account for $500. At the end of the day, that's what they're doing. They say they're taking the other side of your trades. They say that they're copying your trades. They're not doing any of that. They don't trade anything. All it is my Forex funds have made 20 million a month in evaluation fees. Guys have got a lucky streak, got profit in their accounts. They've paid them out of the evaluation fees. They've obviously been doing something behind the scenes as well. We'll find out what that is when the regulatory bodies release their findings, won't we? So anyway, that's what I'm going to do. So just switch to another prop firm. There you go. So there's my take on my Forex funds. It's just this industry. Yeah, just get used to it. They go bust all the time. Zisham, why gold is trapping on both sides? Don't know what you mean. Position trading, most of it in US dollar yen. Oh, yes, point, US dollar yen. We did reject 145. Okay, that's interesting. Okay, we'll have a look at that in a minute. Morning, Ratib. Pound yen, we'll have a look at that in a sec. Are prop firms older than FTMO, or did they start it all? I think probably they were one of the first. I mean, TopStep were the first, but they and they used to do FX. They got out of FX probably for a very similar reason to my Forex funds. Before they got into trouble, basically. You've got to understand this: these are not. People are so skeptical about prop firms, right? Prop firms have been around for decades. I used to work for a prop firm. Basically, up in London, they give you a desk. You go and sit at a desk. You would hire a desk and sit at a desk, basically. So it's nothing new. Trading with other people's money has been going on for decades. Yeah, they will sell you a seat. You prove that you can trade in that seat. They will then give you X amount of money. You prove you can return it. They'll give you more. That's how it works. Traders have been doing that for years. A lot of the traders in banks are prop traders. So there's proprietary desks everywhere. There always have been. The difference is they've moved them online. So now I can start a prop firm this afternoon. I build myself a website. I go and get a brokerage with demo accounts, and I sell you demo accounts for $500. That's basically what's changed. Proper prop has been around forever. The first onliners were TopStep and FTMO, I think, were the first ones out there. And TopStep's still around today, except they only do futures now, and they're probably the top futures prop out there. FTMO have been around for decades. They've all had things go wrong with them. Yeah, they will do, because it's a massive industry. But it's all basically demo account trading. That's all you're doing. Because they know that literally 1% of people will ever get to payment stage. So 99% of people that buy a demo account are failing. We know that. Those are the statistics. This is why we do what we do. Well, I do what I do. I buy a load of them, and some of them will pass, some of them will fail, because your strategy is always going to have a failure rate. So all you do is you keep trading the same strategy across multiple accounts, and the ones that fail, you lose. The ones that win, you take the money out, which pays for the ones that have lost. It's a game. So some of them are going to get caught. There's so many props have disappeared already. Loads of prop firms have come and gone. That's why I say use the big ones, use the established ones. There's people contact me constantly, and there was in Telegram, people recommending different prop firms. Never heard of any of them. Yeah, they've only been going for months. They won't be around in months. So all you're doing is you're giving people money to trade demo. As long as you understand that and you know how the system works, you can game the system. But you're never going to get an account and hold it for 3 months and grow it, which is what they all go. Hey, look, we can scale this up to 1 million. You're never going to get there. No one gets there. But just carry on doing it. There's nothing wrong with any props until there's something wrong with them. In which case, then what have you lost? $500. Whatever you put into it. Yeah. So, but yeah, FTMO, they're good. But people like EA, there's loads of prop firms out there. Just go and check them out. Right, welcome back. Thank you very much. Okay, so US dollar yen. Just going to quickly start. I'm going to start going backwards. I'm going to look at all the yens first today. Just because I'm more interested in what's going on with the yen. We haven't had. Has anybody noticed any yen talk this week? I haven't checked the news at all this week for anything coming out of the Japanese about intervention. Have a quick scan. Doesn't look like it. Where are we? 31st. Is Moody downgraded? Country Gardens. ECB's Holzman. Rate hikes are coming. Another hike or two, definitely. So it's bullish euro. CPI figures. What was the CPI? 5.3. CPI's gone up. Bullish euro. China A+. Good. Okay, so there's nothing coming out of Japan. So what we were looking at with the yens, we were using US dollar yen as our main gauge basically for intervention. So obviously we know that the 145 level was the first intervention from Japan last year in September. The market ignored that shot across the bow. We got to 150. The Japanese said, if you push it above 150, we will hit you hard. They hit very, very hard twice. And the market then started to pay attention. We got back to 145, the initial intervention level. In this week, running up to the 145 level, the Japanese said, if you take it above 145, we will hit you hard. The market actually went, all right, yeah, we'll do that. But they pulled it back. And then we got that top above that 145 level where we were scared to go higher. We're still there. So we are rejecting this level at the moment. I think the market is scared to push it to 150 because they know if they start to rally long on there, they're going to need to watch it very closely because they will start to push back down again. So if we do push up to that 150 level, okay, we're going to get some movement from the Japanese. They're going to start to talk about intervention again, and we're going to get that 400, 600 ADR day coming when they do that intervention. So that movement there we had off the US dollar on Friday, obviously massively bullish. I'm not sure that is actually going to stick, but we'll see what happens this week. But at the moment, we are above the 145 level. So the next stop basically is 150 on US dollar yen. So we're either holding here and we're going to remain holding here, or we're going to break that high from last week. And if we do, we're off to 150. So we'll see what happens with it. But it's difficult to tell at the moment. This is obviously August. So these 4 weeks here are August. So we had that rally up to the 145 level. And obviously you can't really tell if this is real price action or this is August summer trading. That's typical summer trading. Obviously we go range bound and everything. So I think if we break that level, we've got a good run up to that 150 level, which is in this propulsion gap here. So that's where I would be looking to head on the US dollar yen. However, I'm really worried about longing anything yen-wise. I'd much rather be shorting XXX yens, because I think when they do intervene, they're going to pile it down. As soon as the market hears about the Japanese saying we are unhappy with the rate and the speed of movement of the Japanese yen, the market will drop. So you're better off being short on it, really, or short everything against the yen, meaning you're long the yen. So if we look at all the other yen pairs, New Zealand yen at the moment, we're just contracting in a symmetrical triangle. So that's going to break at some point, up or down. We've got the New Zealand, we've got the Australian dollar rates coming out this week on Wednesday. Tuesday, tomorrow morning. So that will affect the New Zealand dollar. We've got no other New Zealand dollar movement this week. Let's see what the DAX is up to. Oh, look, nice. Okay. Just going to break even this DAX. I've got $1,200. Wasn't expecting it to be moving that fast this morning. I'm not going to get greedy on this today. What I'll do, I'm just going to go for that, something like that. It's about 2K, I think. 800, 1200, yeah, 2K. So, and I'm going to break even this. This might not be, break even stops tend to break even. That's why they're break even stops. So I'm just worried about getting a very small rotation day put in today like this. If that's the case, what I don't want to do is go into a hedge which is going to lock in a $1,200 loss. However, it has got some decent upside momentum, so I think we're probably going to find limit orders trigger at the New York Open or at Friday high. So that makes sense for TP1, that makes sense for TP2. I don't think we're going to get out much further than that. By the time we get to yesterday's high, we are still miles away from ADR, so there's still a load of upside potential, but obviously because the market's shut today, I don't think we're going to get there. So if I can grab a couple of grand today, it'll be a good day for a bank holiday. So yeah, we've got the contraction obviously going on in New Zealand dollar yen at the moment. That hasn't managed to make any new highs or test any new highs. So you can see that all this movement we've got on the US dollar yen has been US based. It's not yen weakness. If it was yen weakness, this would be rallying. It's not. So pound yen, we are stuck pretty much the same as US dollar because the pound is bullish. Euro yen, again, we are stuck up there. We've got Lagarde speaking this afternoon. We should have positive interest rate movement coming on that and the pound. So they're both bullish. The US dollar, undecided at the moment. Swiss yen, also stuck in a sideways move. I've got a long on that at the moment, which is very close to TPing. And Aussie dollar yen. So basically the Aussies and the New Zealands are the ones which are weak at the moment, and everything else is kind of contracting. So the yen is very difficult to read at the minute. They've warned about going above 145. They've been very, very quiet for the last week. So it seems that they're more interested in the speed of movement than the size of movement. So it's if that US dollar for any reason was to suddenly take off fast, ADR, 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 that's where we're going to get the Japanese talking about intervention. If that does happen, we'll be close to that 150 level anyway. They're not going to let it go above that. So all these yens are in a very, very tricky spot. It looks to me like there's upside potential in them. However, I would much rather be shorting a mean reversion on them. So if it does push up, fine. I'm no problem building a short, because if I get into 5 positions on it, I don't care, because they are not going to let that go above 150 on the US dollar yen. So, and if they do let it go above 150, there's something very wrong with the yen. But so yeah, I'd be looking for shorts on all these. So any RSI extensions to the upside on the hourly, 4 hourly, any ADR hits to the upside, look to short. That's what I'll be doing anyway. So there's all the yens covered. So hopefully everybody that wants any information on the yen. Somebody was asking about pound yen. XR update.news. Why is it such a popular pair? Seems every YouTube FX trader trades it. Why not US dollar yen instead of Swiss yen? Or Swiss yen. So So let me just go back. How about Darwinex? That's also one of the oldest prop firms. They're not a prop firm, Darwinex. They're a broker, not a prop firm. I trade with Darwinex. They're a broker. Oh, no, I see what you mean. Yeah, Darwinex run things called Darwins. Yeah, Darwins are not. They are not a prop firm. They are a broker, and you can, with your brokerage account, set up what's called a Darwin with them, where they can monitor your account. And if they like the look of what you do on a regular basis with real money in a live account, they will offer investment into your account and copy your trades into their portfolio. Yeah, a Darwin is very different to prop. Yeah, you can't set up a Darwin in a demo account. You can, but you need live trading funds for them to copy you in Darwinex. It's a totally different thing. They're a broker. Morning, Steve. That's shooting up nicely, yeah. So yeah, why do people trade the pound yen? I think the main reason is because of the volatility. So the advantage of trading the pound yen is twofold. Number one, as you can see, during the London session, the pound moves very, very nicely. When the London session comes to lunchtime, New York takes over or opens up and starts to trade the US dollar aggressively. The yen will either devalue or value based on US dollar movement a lot of the time. So when you're trading the pound yen, you get AM volatility on the pound and you get PM volatility on the yen with the US session. London is also trading the US dollar in the US session. So you get volatility on the US session on the US dollar twice during London and New York. So it gives you double the volatility. So the pound yen is something that just moves very, very nicely. So that, you get these big, strong candles, big, strong movement happening a lot. You've also got two news sessions. So you've got all of the European news and all of the UK news being released throughout London and New York. And you've got all the US news being released just before the New York Open, the stock exchange opens, and after the stock exchange opens, usually half an hour. So you've got that period where the pound yen is going to potentially move across multiple news events and two markets at the same time. So it's just a high volatility pair. Look at the Australian dollar and the New Zealand dollar. They're asleep. Yeah. The Aussie and the New Zealand don't move very much when the US dollar does, but the yen does, because the yen has money pushed in and pulled out of it when you are using the US dollar. Same as the Swiss franc. If you want to pull a load of money out of the US dollar because there's a massive news event coming up, like an interest rate, a GDP, or PMIs or CPIs, whatever, you will pull money out of the US dollar and you will put it into either the yen or the Swiss franc as a holding pattern while you're waiting for that news event to happen. Then you will pull the money out of the Swiss franc or the yen and put it back into the dollar when you know which way you want to go. So the yen gets manipulated off of the US dollar movement. That's why I think people like it, because it just moves a lot. So, but the Swiss yen is also another good contender. I don't know. Most of the people you find, and there's certain names I think you're probably talking about, they don't trade real money or anything. They are selling their brokerage, selling their courses, the usual stuff. So they concentrate on scalping these things, which is, it works, but it's, I don't know. It's nice and easy, isn't it? And I think there's a lot, it's the same with this industry. It's always been about copycats. Yeah, you see somebody doing something well, Raja Banks, for example, and people copy. Yeah, he trades this a lot. He also trades gold a lot, doesn't he? So there's people that kind of copy what other people do. They latch onto something, and because everybody's, I get asked in here all the time, don't I? Gold, analyze gold. I don't trade gold. I can look at it and tell you it's going to go up or down the same way as anybody else can. But everybody's got a 50-50 shot. You just need to trade stuff that moves. If it doesn't move, you can't make money. Look at last month, I made 7%. Why? Because the market went sideways. You can't make money if stuff doesn't move. This moves, gold moves. But gold only moves because of the US dollar. This is why we trade indices. And the beauty of us trading indices is we know when it's going to move. With the pound yen, you haven't got a clue when it's going to move. It's going to move sometime between 8 and 10 in the morning UK time. because the banks will start their movements at some time in the morning. There is no open of the banks. Yeah, they do open, but the traders sitting there drinking coffee and stuff. The bell rings at 8 o'clock in Frankfurt. It rings at 2:30 UK in the US. Yeah, we know every single day that happens. With the pound yen, there is a period where it will take off. But when it takes off, you've got that momentum. It's a momentum instrument, if you like. This is just starting to recoil a little bit. So I'm just going to trail underneath. We've just hit this area here. And we've just basically had a load of sellers step in. So if those sellers are going to take control now and push us back, I might as well just grab what we've got, which is just over $1,000. I'll be done, happy with that today. What is that line? That is 3 week ago's high. So this is an old high from back here. It's been reactive. Yeah. Couple of times. Look, we've hit this about 5 or 6 times and reacted at it. Kind of hit it there as well. We've hit it again here. Good chance it's going to react. So going to take the money this morning. It's not fast enough to really look for a big break. See if we get stopped out on it. So that's a wick test. Just gone in there. So that high there, we pushed up, broke it, came back down. We just tested that wick. There we go, out. Look at that slippage. There you go. So there's your broker, right? I said get me out here. Where did my broker get me out? There. So I made 898 instead of 1,000 because my broker slipped me. I've signed a contract with my broker to say, execute me at the best price possible. You see the speed that moved? They couldn't execute my order fast enough. Nothing you can do about it. Just what they do. It's part of their games. So if you wanted to, there's a decent short back down to the gap fill today. I'm done today on that. So $900. And obviously, I'm not trading the US indices this afternoon because there's no open. There we go. DAX complete. So yeah, we go. Can one get that 1R, 2R template for MT5 as well? That EA is a different, that's my own EA. That's not anything that's available anywhere. That's something I've made. It's part of an EA I'm developing. Morning, Franco. Still licking my Forex funds wounds, but okay, other accounts. Yeah, me too. Can you show that with a session overlay indicator? No. Thoughts on my Forex funds get exposed? Already done that. Rewind. Just another thing that happens in this industry. This is why, right? My Forex funds is a prop firm. Prop firms are prop firms. Nothing you can do about that. Yeah. The only risk I ever have in a prop firm is what I pay for an evaluation. Yeah. So I buy 100K evaluations most of the time. So I am constantly buying $500, $300. That's all I'm doing is I'm putting $300 and $500 in. Yeah. And I have 3 or 4 evaluations running with a prop firm at one time. So my total investment in a prop firm is never more than $1,000. That's what my risk is. My Forex funds going pop, that's all I can lose. Yeah. They're unregulated. I haven't got anybody I can go and phone up and say, oi, what's going on? Yeah. So basically you lose that money. With my broker, I put 1/3 of my trading balance in my brokerage accounts, basically for the same reason. If my broker goes pop, but my broker is regulated, so the only reason they will go pop is if there is a black swan event or something else happens. But if my broker goes pop, I only have a third of my trading capital tied up in that brokerage. Yeah, and I learned this lesson the hard way from the Swiss franc peg removal and Alpari. Alpari went bust when the Swiss franc peg was removed. I didn't lose anything. I got it all back, obviously, because it's a regulated broker, but I had all of my trading capital frozen when the Swiss franc peg was removed. Yeah, so I learned the lesson there that you do not put all your eggs in one basket in this industry. Every broker is out there to make spread and commission and swap. Their job is to spread, commission, and swap on your accounts. Every $1,000 deposited into a brokerage, 60% of that money disappears in 60 days. They know that. That's the statistic. So their job in that 60 days is to spread you, swap you, and commission you until you go. Yeah, 95% of traders, it's 90% of traders lose 90% of their capital in 90 days. Yeah, whichever statistic you want to look at. But that's the real facts of trading, right? So they have that short time window to make money out of you. They make sure you sign a contract to allow them to do that. Yeah, go and read your contract. You probably won't want to trade ever again, but go and read it. Read the small print. Read every part of that contract. You'll suddenly go, what the hell? Why am I putting my money with these people? Because you don't have a choice. With prop, it's a little bit different, isn't it? Because you're buying a demo account. Why don't you just go and get a load of demo accounts, prove to yourself you can trade, and then go and get a bank? Same thing. At the end of the day, if you've got faith in your trading, put your money behind it. Yeah, but don't put it all in one basket. But that's my Forex fund. Let's use another one. Franco, you taught me not to use blinders and look for moving pairs. Yeah, not just one favorite pair. Yeah. This is the thing, right? I trade every pair. Yeah, with this pound yen thing, yeah, a load of people trading the pound yen. That's fine if you're scalping. And if you're scalping, you need something that moves. But my argument for using indices to scalp, like the DAX, the DOW, the S&P, the NASDAQ, the FTSE, whatever you want to use, my argument for using these is we have a time of day we can guarantee movement. With an FX pair, there is no guarantee of movement at any time. It will go when it wants to go. So if you specialize in one FX pair and learn how it moves, basically you're trying to figure out how something moves randomly. With the indices, I am also trying to figure out how something moves randomly, but I have an advantage and an edge with indices, and I know that at 8 a.m. and 2:30 UK, that's when it's going to happen. If I try and find an advantage on something that moves randomly at some point during the day, where's the edge? Yeah. So if you're going to trade FX, you should trade everything, but you trade it when it moves. You trade the setups. Yeah. So I have the dashboards there because I don't know what is going to be moving every day. And I don't know when it's going to get to a point where I want to enter it. So I monitor everything and I trade what sets up. I don't care what it's called. I could remove all of these names from here, right, and call it 1 to 28. So when number 15 hits 70 on the RSI, I will sell 15. I don't care what it is. Doesn't matter, does it? It moves at random. I don't care what the pair is. What I care about is that the thing has moved up, therefore it's going to come down. Yeah. If you just trade the pound yen, for example, and it goes into a rotation day, 5 days on the trot in a row, you're not going to make any money. If every other pair has been going mental and this one's been going sideways and that's the only thing you trade, you don't get paid that week. It's lunacy to trade an individual instrument. I just don't get it. I don't get why people do it. They say that they become experts in it. I've tried it. It moves at random. Yeah. This day, you can see when there's news. Yeah. I mean, this day, if you missed that day you didn't make any money, that day you didn't make any money, that day you didn't make any money unless you caught the back end of the New York session. Yeah. So for that entire period there, if you've got a breakout strategy, you didn't make any money, did you? But I can guarantee you, if we look at any other chart during those 3 days, you'll find there's a load of movement on other things. New Zealand dollar CAD, if you're trading that, ooh, look at those massive moves. You missed that massive 3-day move, which was 170, 60, 120, 180. 3 ADR move. But because you weren't trading the New Zealand CAD and you were sitting there watching the pound yen, you didn't make any money. Stupid. So that's why I don't trade one instrument, because I can't be bothered to sit there and wait for it to actually do what I want it to do. GM, what's your take on US oil? Just done that. Looking for a breakout to $95 a barrel. Up. But wait for a pullback because it's just broken. It's been moving up for, what? Basically one sideways. Yeah, so look for a pullback. So if you want to get into oil, look for a pullback into this propulsion gap, I would say. There. That's where I would look for a long. Possibly out of that one, but that's been filled. So that there is where I'd look for a pullback. And that will put it down below that low. So everybody that sees it coming down below that low will be going short on it because they'll see a false breakout. We'll cut it down to there. And everybody that actually longed it and made that propulsion move happen, Friday, Thursday, that was oil news Wednesday. So everybody that saw that move happen and made that move happen will be buying it again there. And they'll stop out everybody that shorts that. Longs, I think, on oil. Morning, Astro. AZ, I struggle a little with TPs. I know it depends on the situation, but generally, do you look to take 0.25, 0.5, or 0.75 on each position? I don't look to take anything. I look to where the market's going to go, yeah? So I won't take less than 0.25%. So that is 0.25%. Ignore that figure there because this is trading off the balance. That's giving me my balance figure, but that is 0.25% of the initial deposit on the account. So Swiss yen, right now, I'd be happy to just shut that and put that down there. That'll be 0.25. Yeah, see that one? 225 is 0.23. So it's 100K account. So yeah, I target where I think it's going to go. So look at my Swiss yen TP. Where do you think my Swiss yen TP is? Going to be where price is going. I know, where do we know price goes to? Support and resistance and propulsion. Yeah, so where's my TP? In that propulsion gap. Yeah, I know there's a high probability of that getting reached. There is a high probability of that getting reached as well. But that's easy for me to get out with around about 0.35% profit. Yeah, so that's where I'm going to get out. It's within ADR. It's easy to reach. There's a 58% probability that it can get there. And we know it targets propulsion gaps. Take it. That is also from entry 114 pips, which is 1 ADR. So that's 1 ADR. Yeah. If you get, the thing you got to remember is if you only target, if the EA, obviously you target a percentage of your account or you target a movement of ADR. So if you're using the EA, it will automatically get you out when those things are hit. But as a trader, you can see where things are going. Look at the range on the Swiss yen at the moment, right? It's obvious to anybody that's been trading for 2 minutes, we're in a range, okay? Where do you think it's going to go? Probably to the high of the range. Or because we've just put in a new low, that reversal alert there could be peak formation high, low. We're going to put in a lower high. If we're going to put in a lower high, what's it not going to do? Hit that. So where would it go if it puts in a lower high? Lower than that. So where's a good target lower than that? There, propulsion, because we know it gets hit. And it's within ADR. So it can easily do that today. In fact, it can do it in the next hour, probably. Every time you look at a chart, you're going to see something different. So if we look at another pair that I'm in, pound US dollar. Yeah, I have a TP on this position here because if this thing is going to stay in a range, I'm going to get out of that one there. However, Where do I think it's going? Back up into these propulsion gaps at some point. This one hasn't been tested yet. That was a big move down. So it's going to either stay range bound, in which case then I will get out of that trade, wait for it to come down, add it back on, get out. And as long as it stays in a range, I will just keep adding this thing back on. Added it, took it off. Added one there, took it off. That was a bit tight. That was a scalp. But, you know, I'll just get in and out and in and out. But the targets are always going to be where price is going to go. This is where people fall down when they trade. Yeah, they go, I need to achieve 1 to 2R as a target. So you take a trade there, you put a stop down there. To achieve a 2R target, you need to get up here, right? Why do you think it would go up there? Because if we hit that support twice, broke it and used it as resistance multiple times, just because you want to get that, because your risk reward says you need to get that, doesn't mean the market's going to give it to you. The market goes where the market goes. The market's been going to this level for the last month. So if you set your target up here, it's a lot harder to hit than that. If you're happy to get out there, get out there. But there's no right or wrong how to set targets. You just have to wait. You've no idea whether the market's going to come up there. We don't know what's going to happen with the US dollar. We've just had a massive rally on the US dollar. Don't think we should have had. They're probably going to freeze their interest rates now, which means the US dollar is going to weaken. The pound is going to increase their interest rates, which means the pound is going to strengthen. The bias for me on the pound US dollar is long. It's just not been able to get there because we're in August. Now we're coming into September. We should hopefully get some movement. When we get some movement, look at how quickly in a week it did that. Look at the equidistant move. I don't know what that is exactly, but so from there to there in a week was 324 pips. From that low there, 324 pips up, somewhere around here. Absolutely easy, so easy for it to do that when we've got some market movement, which we haven't had in August. We have now. And we've got big news events coming this week as well. So, but this is why the support resistance propulsion indicator exists, because we're drawing levels. These black lines here aren't there just because they're black lines. They're there because that was last week's high. That was the previous week's high. This was last month's high. Yeah, the market reacts at weekly and monthly levels. So if you've got a target, if you're long on something and you can see weekly and monthly levels coming up, we know the market reacts at those levels. Target those levels. Don't target that because you fancy it. Target where the market is going to go. Get what the market will give you. And if the market only gives you 0.25% there and you say, oh, I want 0.5%, take the 0.25%. What's better, taking 0.25% or being back in drawdown and sitting in this thing for another 2 months? There is no answer. There is no rule. It's where do you think it's going? I think it's going there. I have as much chance of that getting hit as you have of anything that you've got getting hit. I have not got a clue where this thing's going. If I knew that, I would be a billionaire. Yeah, this thing's going up or it's going down. So basically, I'm going up there because that's where I think it's going, because I know that these things get filled all the time. Look at all these grey ones. Support, resistance, propulsion, targets. Look at that propulsion target there. Straight into it, straight out. Why? Because that's where they sold it. What happened when they got there? They sold it again. This high, why did it bounce there? Because that's where they sold it the last 4 times. Why did they sell there? Because that's where they sold it. Why did they sell again? Because that's where they sold it. What happens when we get there? Probably going to sell it. If they don't sell it, it's going to break out. Everyone is going to flip long. Where's it going next? To the last place they sold it, which was there. I have no clue whether it's going there or there, but when it gets there, it'll give me an indication. So I'll take a little bit off there on that one and hope we get through. And if we do get through, brilliant. If we don't get through, I'll stay in it. There's nothing I can do. I'm long. Yeah. So set the targets where you think it's going to go, but don't ask me where it's going to go because I don't know. Neither does anybody else. Go and follow another guru online on any other YouTube channel. They'll be going, wow, when it breaks this, it's going to do that, that, and that. No, you've no idea what it's going to do because it's random and it's driven by 10 massive market participants who also don't know where it's going. You can't predict anything. You can hope and you can follow what's happened in the past. Yeah. propulsion gaps get filled. Propulsion gaps get filled. Propulsion gaps get filled. Propulsion gaps that have not been filled. We're in an uptrend, look. Come out to the bigger picture. Going up. Huge propulsion gap, not filled. Sometimes they don't get filled. So you just scale in and wait for it to come down and you get out when you can. They don't work all the time. Nothing works in trading all the time. Doesn't work most of the time, does it? Let's be fair. Anyway, there you go. If you were to make enough money, is it possible for a retail trader to trade directly on the markets? Or is a broker the only option? You can go professional, but you need to set up a company and you need to get a license. So, no. You can set up professional accounts, yeah, but you are still trading through a broker, a brokerage. You can set up your own fund. Yes, I mean, you can, but you're going to need a lot of money. To get your license is going to cost you tens of thousands, literally. The amount of, it's not worth putting the money into it. It's just not worth it. I've got many emails from Prop in the last 2 days. Yeah, I have as well. Yeah, it's 40% discount here, 20% discount there. They're all trying to scoop up all the My Forex funds. My Forex funds are the biggest, basically the biggest prop out there. 135,000 members, right? There's now 135,000 of us going, well, I can't use them anymore. They're going to want you on their books as fast as possible. Pick whichever one's giving the cheapest deal. There's one I can't remember. I've got their email. They've emailed me 3 times. I can't remember which one it was. I think it's Alpha Capital. Alpha Capital. Audacity. It might be Audacity. Is it Audacity or Alpha? Yeah, no, it's Audacity. Sorry, it's Alpha. So these guys are like lost and found. They're just playing off the back of it, aren't they? 14 hours to go. So yeah, they'll be the next one I will try. Are these? I don't know who their brokerage is. Yeah, they use ACG. In-house proprietary brokerage. Got their own brokerage. Why is My Forex Funds in trouble? They've got their own brokerage. So you'd have to look up ACG markets and see what their regulations are. Yeah. Right. So first thing I do when I land on this website, what's ringing alarm bells for me? I'm sorry, but if you're a big brokerage house, you know how to build a website where your logo appears. Run a mile. Don't. They'll get exactly the same treatment as My Forex Funds. Once one falls, they will all start falling. Yeah. Look at what comes up in Google. ACG Markets is a proprietary broker for Alpha Capital Group. They've got their own brokerage on a website that cannot load a logo. Do you want to trade and give your money to these people? You can give me 40% off as much as you like. But so anyone on this list, these guys, you know, but My Forex Funds, I've been recommending My Forex Funds for ages. Well, I've been using My Forex Funds for ages. And I recommend them because they're the cheapest. Yeah. I don't know about regulation or any of these guys or how they really work. Now we know that if you haven't got a third-party brokerage within a prop, there's a risk there, isn't there? So probably worth checking out E8 now and see what theirs is. Yeah. Just got to do your due diligence now. Have I gone over UC? Morning, Diamond. No, I haven't. I'm doing my analysis back to front today. So let's just do US dollar Swiss quickly first. US dollar Swiss, obviously we've got no RSI extensions. Last trade on this, Jesus, I haven't traded US dollar Swiss all month. Look at this. When was the last time I traded that? It would have been there. But yeah, haven't traded US dollar Swiss for ages, sideways. Range bound. It's come off of the high there on Friday. So this move, obviously, on the US dollar was off of the news last week. So if we just look at the news quickly while we're covering these US dollar pairs. So last week on Friday, we had the unemployment rate, which came out at 3.8. So unemployment has gone up. That stops. That is negative for the currency because it reduces the leeway they have for increasing interest rates to control inflation. So if they're going to do that, it brings the currency price down if they don't increase the interest rates. If inflation goes up, they won't have a choice, but it's negative. So the fact that the market has rallied because the non-farm employment change is not what we're talking about. Unemployment is the key driver for fundamentals. Everyone calls it non-farm payroll. That's the thing that moves it, not that. It's gone up because that's green. Yeah, it will come back down again. So this US dollar, I can see probably trickling down this week, back down into these lows. But we are completely sideways on US dollar Swifts. So that was a nice trade on Friday. You've missed it. The 5-minute reversal alert's already gone in. This morning, it went in on Friday. There's your M pattern reversal on Friday. So that was a massive ADR move. So you're probably short on this off of ADR. So if you were trading on Friday, you would have seen an ADR of 6. Yeah, ADR basically. That was 100% of ADR. So that was a short entry there, perfect short entry there, which retested. And obviously we're off today. US dollar CAD, totally sideways. I'm short on this at the minute. 4 positions on, sideways, been stuck in it for a few weeks after that initial move. So you see this, all this is done is one break, sideways, break, sideways, break, 2 weeks sideways. Canadian dollar and the US dollar looking like we're getting rate freezes. So there's no fundamental advantage either way on these two at the moment. Obviously, they move together as well. So these are like the Aussie, New Zealand, the Euro, Swiss. When you get a lot of movement on one or the other, they drag each other with them. Don't know. So, I mean, I'm short on it at the moment. My average is basically 125 ADR, which is that high, these lows. So either we're going to hit that, we're going to bounce back off and stay range bound, or if it does break that range low, we should flush back down and retest this level. In which case, obviously, you can see where my TP is, just above propulsion. So that's what I'm targeting over the next week. Hoping we can get sort of a 2-3 ADR move to the downside. If the US dollar does continue to rally and we come up, there's a nice short opportunity at ADR, just under ADR today. But if it does break out of those highs, we've got this propulsion gap here, which has been tested initially. They sold into it. They sold into it there. We put in a lower high there. So it's seller heavy all the way down there. But I would expect a pullback on that before we start to come up and test that high if we're going to have strength in the US dollar. Don't forget oil is rallying at the moment. If oil is going to rally, that is going to help the Canadian dollar rally as well. So any kind of weakness we see in the US dollar off of news, if oil is rallying at the same time, the Canadian dollar should be able to take control of that and drive it back down again. So we'll see. But we've got a nice M pattern reversal last week on this. Yep, so there's your 4-hour reversal alert. This is your retest. So as soon as we break that back down below there, you'll get your retest arrow on that. That will become your M pattern. Yeah, but it's very difficult to tell what's going on with the US dollar. I don't know at the moment. I don't know. I mean, the Fed never knows, does it? This is the problem with the Fed. They give us very, very mixed messages all the time, the Fed. So it's hard to tell at the moment what's going on with the US dollar. We're completely sideways at the minute. So I'm just short. I've been stuck short since beginning of August. So the whole month of August, basically, all we did was 290 pips. So we went 70, 142. We went 4 ADR. I mean, it's the story of last month, isn't it? Everything went kind of 3 or 4 ADR. Just grinding, you know. So anything that stayed range bound, we were in and out and in and out, no problem at all. But there wasn't many opportunities because we didn't get much movement, which was strong enough to get RSI extensions. Anything that hasn't gone range bound or has gone into a wide range has taken like 3 or 4 ADR to do it over a period of 4 to 6 weeks. But that will all start to unravel now. So we should see some really big ADRs over the next couple of weeks because obviously all the ADRs are contracted. As soon as that market movement starts again, we're going to get ADRs hit, which will just return back to normal ADR levels. And that will take 10 days to rectify itself. So you have this period with ADR when you come out of summer trading where you'll get massive 225 extensions, 175s, 200s quite regularly, because what the market is doing is just returning back to its normal ranges. We've got contracted ranges at the moment. Pound New Zealand is always my main focus. This trades around about 250 to 300. It's trading 148 at the moment. That's tiny. So yeah, it'll all change. But yeah, so that's US dollar CAD. Nothing much going on with that one either at the minute. Laszlo, could not see info on your site. I guess use some sort of trade copier. For what? Don't know what you mean, Laszlo. Everything you need is on the website about what I do. If you go to Free Trading Education, go to Position Trading Bootcamp. The course there on position trading. I've got an EA and indicators that will help you position trade if you want to use the strategies I use and teach, or you can use any strategies you like with position trading, doesn't matter. But I have products built that you can get for the way that I trade. And I trade the opening range breakout strategy on the DAX, NASDAQ, DOW, and S&P. There's a video about it there. It explains all about that on the website. And there's an EA that will help you to auto trade that. Yeah, help you to trade that. Auto trade it. Yeah, you still trade it. It's not a set and forget. None of my products are set and forget. If you want set and forget stuff, go to the MQL5 marketplace and buy some of that crap. It's just not what I do. Everything I do is helps me automate my job, but it does not do my job. I do my job. It's all on the website. Go and have a look. So that's US dollar CAD. So we'll whiz through the others in reverse order. Let me just catch up in the chat. One of the issues I find with my psychology is after I close a trade in profit, I keep checking to see how much more I could have taken. Don't do that. Don't do it. Just stop. I don't really have a solution for that one, AZ. Yeah. If I close, I mean, what did I close out on Friday? US dollar yen. So US dollar yen I closed out on Friday. From there, there, and there. Closed it out on Friday. Whether this goes there or there after that's happened, just forget about it. What did I do there? Made 0.25% profit on my account. That's the job, making money. I made money. Yeah. If you could have made more money, that's fine. But when you close that position, when you open a position, when I open that position there, it's either going my way or not. When I close that position there, it's either going my way or not. If you don't have a psychological problem when you open a position, why would you have a psychological problem when you close a position? Because you should have the same psychological problem opening a position as you do closing it, because you have no clue when you open that position whether it's going up or down. You have no clue when you close that position if it's going up or down. All you're doing is your job is as a robot is to get in and get out. So you get in, you wait for it to go green, and you get out. Yeah, where it goes after that is irrelevant. Look at the DAX this morning. So I've closed my DAX out at a $900 profit this morning. Where's it gone after I closed my DAX out? Went down a bit. Now it's gone up a bit. I'm not interested. I'm out. I'm done. I've made money. Your job is to make money. I made money. I made $800. Yeah. On the yen, I made $300 or something. Move on. Your next opportunity on this is watching for an opportunity. Get into the next trade. That's your job. Yeah. So this is why. So I think what you're talking about here is the problem you have probably got is itchy trigger finger syndrome, right? This is why I built these dashboards. So I have the ADR dashboard and I have the RSI dashboard. The reason I built these was to stop me looking at charts. Yeah. So if you've closed a position out and you have an urge to go back and see what happened after it, it's because you are looking for something to do, right? So use dashboards to monitor the market for you and let them tell you when to do something next. What happens after isn't going to help you. The only way it will help you is when it goes to the target that you'd set. So let me have a quick look at another trade I took last week. Euro US dollar, that hit target last week. Right, perfect. There you go. Euro US dollar. I got in here. Why? Well, the EA got me in here. Why? Because it was an H1 M5 entry. My target I set on this, again, another lesson in what we were just talking about, where to set your targets. My target was here. Why? Because that is the low before that high was made. If we were going to go range bound, that's what I foresee happening. So I set my target there. What happened? We hit it and we bounced. So was I right? Yes. What happened afterwards? It came down a little bit more. Then the news hit on Friday. That news event could equally have done that. I don't care. I took my trade off there because it went to where I thought it was going to go, and it gives me satisfaction in seeing that it bounced because I was right. It did bounce there. So I took my trade off. I made enough money on that trade, around about $250 or something, to be happy with it. The fact that I could have made 500 on it coming down into that level, yeah, is irrelevant. I made money on that. I'm now waiting for the Euro US dollar to set up for a new trade. If it doesn't set up for one, I don't trade it. But if you go and look at this historically, so there's another example, right? There's one there, H1 RSI extension. I took it off there. Yeah. It then pushed down and sat sideways, pushed down a bit more, sat sideways, pushed down a bit more, down a bit more, down a bit more. Look at all that I left on the table. But look at how long I would have had to sit in that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. I'd much rather be out, have that in the bank that I can go and pay my mortgage with, than sit in this in pain for 10 days. And every time it pushes against me for 2 days, panicking. And I probably would have taken it off at the same place I took it off initially. It hasn't done anything since there to warrant me getting into a trade until we got to there. Then it gave me an opportunity and I took it. Why didn't the EA did? But you know what I mean? The strategy presented another opportunity. We took that opportunity. I don't care what happened after that. You've just got to try and not worry about it because it's nothing you can do about it. If you look at the past and go, all you're looking at is a what if scenario. What if scenarios do not make you money. They don't help you at all. They do show you if you get out too soon. So if you are going through your analysis and seeing every trade on your chart and you're seeing that every single trade you're getting out too soon, you set your target there, you took it off there, you get out too soon. If that happens every time, you know what you now need to do. Every time you get into a trade, don't look at your open trades either. Because if you're looking at the chart, it's giving you a reason to get out of a trade. If you're short on something and it puts in a whacking great bullish engulfing, like that, that scares you out the market. Just because there's a bullish engulfing does not mean on that downward movement, the thing's going up. It means it's just probably profit taking on the downward movement before the second leg starts. That will get you out if you watch it. If you watch what happened after, it has just as much of a negative impact. There's no easy way to do it. Just try get out of it. Wait for dashboards to alert. Shut your charts. My old mentor taught me, when you take a trade, we were using stop loss based strategies at the time. He said, when you take a trade, you set your stop, you set your TP, you do not look at that chart again. That's it. Come back to it 2 or 3 days later, see how the trade's going on, and then shut that chart again. Never look at it again. Because if you look at it and if you watch every candlestick close, every candlestick will either make you happy and want to take the trade off because it's going your way, or sad because it's coming against you, which will make you want to take the trade off. Every single candlestick will give you a positive reaction to remove the trade or a negative reaction to remove the trade. If you don't look at the chart, you don't get one. Look at last week. I was on holiday last week. I didn't look at any of this. It just banked because that's where I set my targets. They all got hit. Didn't look at it. Don't need to. Because if you think it's going somewhere, like here, we've got a double bottom bounce going in on the euro US dollar now. Where do you think it's going? Probably up there. Going up to there or there, isn't it? If it doesn't go to there or there, it might go to there. I have no idea. It's going to go to one of those three levels if it goes up. It might hit that accumulation and that propulsion gap and come down. I have no idea. But if I get into this trade here right now and I set my target there, next time I look at it, it will either have got there or it won't. And if it hasn't, I will deal with it. If it has, it deals with itself. Yeah, this is what I keep saying. Watch this. Don't worry about this. Worry about this. The only thing that is on my radar at the moment is pound US dollar because it's in 1% of drawdown. That's the only thing I'm ever going to look at because everything else is just trading. Yeah. Just got to try not to concern yourself with it. It's hard. Practice, I guess, is the only thing you do. Ian, the propulsion gaps you are talking about, are they the same as FPGs? I don't know. I don't trade that stuff. Propulsion gap is basically a impulse move created by a bank where a candlestick trades in one direction and it doesn't trade all the way back into that candlestick. They were originally created by a guy called M.A. Perry in the 80s, and he named them wide range bars. Other people have taken the principle and called it other things. I call it a propulsion gap. Other people call it an impulse move. Some people call it an FPG. I don't know if they call it. What the definition is, the definition, isn't it? The definition of what I use is candle is part of a 3-candle move. Yeah, that candle there cannot have had a trade back up into it, which gets to the top of where that opened. If that happens, that creates a gap in the market, a propulsion move, propulsion gap. That euro US dollar one there, if you switch on to a 4-hour chart from 2 days ago, you will see it like that. It's just a bank order. But they get retraced into. Yeah. Propulsion move. Propulsion move. Propulsion move. Propulsion move. Propulsion move. Yeah. They're just magnets that the market is attracted to. It's not anything new. Impulse moves have been around for, if you go and read books from the 60s and 70s, they talk about impulse candles, impulse moves. They've been talking about them for years. What you call them is up to you. I call them a propulsion gap because I was taught that these were called propulsion candles. Then I stumbled across M.A. Perry's work. He called them wide range bars. ICT, I think, calls them FPGs. But what the definition of an actual wide range bar, FPG, propulsion gap is will be different. But at the end of the day, it's a big move in the market. That's all it is. Whatever you call it, however you call it. Can I quickly show my propulsion gap indicator settings? I haven't really got any. Propulsion candle strength I set to 0, and bars back I go to 1500. And I use sky blue and Gainsborough for my colours. Whatever you like. Yes, you have to be a detective before you jump, Franco. Yeah. So you're talking about the prop firms, yeah. I have a few friends who keep getting sucked into guru land. When I show them the same education available for free, they dismiss me. I've given up trying to save souls. Yeah. What can you do? At the end of the day, everybody believes there is a way to make money out of this market that is easy. There isn't. There never has been. If it was the case, think about it. Everybody's looking for the holy grail, looking for the indicator, the EA, or the strategy that works all the time, consistently, and makes you money easily. If that was the case, would we not all be millionaires? Not us in this room, everybody on the planet. If it existed. Yes. There is no one can answer no to that question. And if they are, they're nuts, because you can't. Yeah. If there was something out there that you could put onto a chart that just made you money constantly, we would all be doing it. Why would you want to work? We wouldn't have an economy. We wouldn't have jobs. It doesn't exist. However many times you tell people that, they will still go off and hop to system, to EA, to EA, to indicator, looking for this thing that can predict the future. It doesn't exist. I've been looking for it for 15 years. I gave up after 5. Most people, I think, give up after about a year or 2. I gave up after 5. I was really persistent. But yeah, doesn't matter how much you do. Look at how many people we've got in this room now. 84 people in this room. Yeah. You think if I found the Holy Grail, I'd have 84 people in here? No, I'd have thousands. But I'd only be in here for one day, wouldn't they? Because they'd just go and get the thing and use it, and they'd never come back. Just doesn't work, does it? Thanks for subscribing, Matthias. Welcome aboard. Or Matthias, sorry. Lino, welcome aboard. Thanks for the subscription. Lee, nice one, Lee. You paid for your vacation by the pool. Yeah, but that's not through anything that's magic. That's through hard work. Have a plan. AJ Birch. Have to say I have plain charts and yours look so much better, cleaner. What's the correlation between the FTSE and the pound? Negative. So when the FTSE goes up, the pound goes down. When the pound goes down, the FTSE goes up. Typically. Not always the case. Most of the time. Afternoon from South Africa. Morning even. Laszlo, for the trade copier reply, I just assumed that you do copy your trades across prop accounts. No. The reason I have several challenges going at the same time is basically the easiest way to explain it is if you look at any P&L, let's use this as an example, right? So let's say this is your P&L. So you started on this day here, right? And you had a losing day. Then you had a break-even day, a break-even day, a break-even day, and then you had a losing day. Then you had a winning day. Then you had a losing day. Then you had a break-even. No idea what's going to happen today. So this account started there, and it's currently sitting down there. Yeah. I started on the same day on another account. Yeah. I'm roughly break-even. I'm not in a loss on that account. Yeah. However, let's go back to the pound US dollar again. Or the euro US dollar I was on, wasn't it? No, what was I on? Oh, I can't remember. It doesn't matter anyway. Let's use this one as an example, right? So if I start my evaluation on that day, I start off with a losing day, then a break-even day, a break-even day, a break-even day, a winning day, a winning day. So from that day, 1, 2, 3, 4, 5, I am up. If I'd have started my evaluation on that day, I'd have had a down day, and a down day. A break-even and a break-even. So 5 days into the evaluation starting on that day, I'm down. 5 days into the evaluation starting on that day, I'm up. 5 days into the evaluation starting that day, or rather 2 days because there's only been 2, I'm down. So if you start an evaluation on Monday, another one on Tuesday, another one on Wednesday, another one on Thursday, trading exactly the same strategy with exactly the same EA or manually, however, you will have a totally different result on every single one of those accounts because you are not in control of whether you make a profit or a loss. The market is in control of whether you make a profit or a loss, dependent on whether it goes the way your strategy wants it to go or against the way that your strategy wants it to go. That is out of your control, right? So if you start 5 evaluations, one on Monday, Tuesday, Wednesday, Thursday, and Friday, by the time you've gone through a 10-day period, one of those accounts will probably be passed. maybe even all 5. Maybe they will have all have blown. But the fact of the matter is, none of that's in your control. Yeah, you don't have a choice, do you? Because your strategy tells you to do X and Y and press buy or sell at a period of time when a condition is met. What happens after the hit of that buy or sell button is entirely down to the market as to whether or not you make money. You can't control that bit. Yeah. So that's why you run multiple evaluations. You can do it on different prop accounts. You can do it in one prop account if you want to. Entirely up to you. But whether you pass or fail a strategy is dependent on the strike rate and the landing of that strike rate. So if you've got something that's got a 50% strike rate, you would imagine if it's got a 2 to 1 R, it will pass the prop evaluation. However, the landing of that 2 to 1 R and that 50% is what makes it pass or fail. If you've got a 5K drawdown, right, on an account, and you risk 1% of your account and you lose, that's a blow. However, if the next 2 to 1 R trades after those 5 were win, you passed your evaluation. Unfortunately, you blew it before that happened. So if you'd have started there, you would have passed it immediately with 100% strike rate. Whether that goes first or that goes first has nothing to do with you or your strategy. Prop firms know this. There is no strategy out there that will not have a losing run which hits either the daily or the overall total drawdown target. So that's 10%, that's 5%. Yeah. So they know that every strategy out there will either draw down by 5% or 10% at some point, blowing the account, blowing the evaluation, or whatever. Yeah. So if that is how they've set the rules up to guarantee failure for everybody, the only way to beat them is to change the rules. That's what I do in prop. Multiple accounts, different, same strategy or strategy variations. Well, I trade support, resistance, bounces, as well as opening range. But if you spread your risk across different trading conditions, because you never know what's going to happen. This morning on the DAX, did I have any clue what was going to happen? No. What did I do? I went with momentum. Momentum broke long, so I went long. There's your opening range. I took an opening range break. Sorry, there's your opening range. I took an opening range break long. I got out. Why did I get out? Because I saw there's some resistance that might well be where we stopped today. So I got out. Tick. It could have done that and that and that and that, and I could have taken a $1,500 loss on a hedge. No clue. Not in my control whether that goes up or down. What is in my control is the strategy. So the only thing you can do is pick a strategy, flip a coin, go onto the internet and go Forex strategies, number 7, go down to number 7 result, click it and trade that. You've got as much chance of passing prop as you have of trading ORB, position trading, support resistance trading, or something completely random you find on the internet. Because this is a random market and there's no way of predicting the future movement. So you have to play the game the way that you can extract money from the market. And there is only one way to do that. Play it at random. Because their rules are set to fail you. Once you identify it, you win. I lose a lot. I lose a lot. Lose a lot. But what I win is more than what I lose. Think of prop firms like your risk-reward ratio. Every single prop account is a trade, right? Some of them are going to win. Some of them are going to lose. You don't know how big the TPs are going to be on them either. EA, I've passed an EA evaluation in one day. I passed the morning on the DAX. I passed the afternoon on the NASDAQ. The evening, I had a funded account. Was that because I'm a good trader? No, because I got a lucky break on the DAX and it moved really fast and did an ADR. And I took the NASDAQ the opposite way back and it did another ADR the afternoon. That's why I passed, not because I'm a good trader, because I was lucky enough to hit the sell button when the DAX collapsed. I was lucky enough to hit the buy button when the NASDAQ popped. Nothing to do with my skill at all. The way it is. That's what you need to understand about prop. If you're going to trade your own money, exactly the same rules apply. Except with your own money, I couldn't care less if I draw down by 15% on my account because I know I've got a long-term edge. I'm going to have losing runs. I accept that. I'm going to have 6 weeks where I'm in drawdown on the pound US dollar. I accept that because I know it's going to happen. It's happened to me over and over and over again. I've got the direction wrong. I've just got to wait. That's not in my control. What is in my control is how I manage the position, and as a position trader, where I place my entry level, which I can adjust, obviously. So, make sense? You can also use a trade copier, but again, check with the rules of all these firms. They're all different. Were you triggered on US dollar CAD on Friday? My EA didn't take that one. Yes, I was triggered on US dollar CAD on Friday. Sure. But I'm already in short. So that's fourth position short. Congratulations for the 10,000 subs. Have I? I haven't looked. Oh, yes. So I have. There you go. Well, that was... thank you very much. I've no idea how long to say. That's only taken about 4 years. Because I don't promote Lamborghinis. Harold, the ADR EA recovered by my Forex funds 20k from a negative 19.2 all the way up to 27, and then last Friday got frozen for fraud. Yeah. Well, we don't know if it is fraud yet, do we? Let's wait for the outcome of the CFTC investigation. So this is the accusation, basically. So we don't, this is the problem. Traders Global Group Incorporated is the brokerage that they have set up that they do the trading through. What the problem is we don't know how they've been operating this thing behind the scenes, what they've been doing with it, because that's all kept hush-hush, isn't it? What they are, I think, worried about is that they've taken all these fees and they've basically been manipulating price within their own brokerage to stop people out, to lose the evaluations. How that differs from a normal broker doing the same thing, I think, is because of the way that they're doing it. Yeah, in a normal brokerage, if they spread you out, you get stopped out on a trade, you lose that trade. Yeah, you're going to take hundreds of trades in your account. When they do it as a prop firm and they spread you out and stop you out and lose the evaluation, they're basically stealing the evaluation fee from you, aren't they? Because they can blow your account with one spread, right? On a normal brokerage, when they do that, which they do all the time, Aussie New Zealand, look at it today. Look at the Aussie New Zealand today. Oops. Yeah, that's where the market closed. That's where the market opened, and that is how far they spread that candle. Yeah, this is normal. This is what brokers do. There's nothing you can do about this. They spread that candle 25 pips. Yeah, that's half an ADR. They spread it by half an ADR at the open. Anybody that traded on Friday, yeah, see that wick from Friday? Anybody that took a long from there or there on Friday had their stop down there, that spread would have been down there somewhere as well. They would have killed them all. Nothing you can do about it. Look at this. That's where the market closed. That's where the market opened. That's what the spread was on the candle. They do this every day. The difference is, if they do that to you and stop you out, you lose a trade. On my Forex funds, you lose everything. All that money you put in. So I think this is what the CFTC are looking at, which is a difference, isn't it? I don't know. We'll see. Wait and see what happens. But this guy, obviously, we don't know what's going on behind the scenes, how much of this has been going on. I just know that I've been paid, right? I've been paid. And I know lots of people that have been paid. There's people in here that have been paid. There's people in the Telegram group that have been paid. Yeah, all trading ORB and other strategies. No problem. So they pay out. We know they pay out. I've been paid. It all goes through a contract I've got, with deal. It all gets paid out. It's not a problem. There's obviously something behind the scenes that the CFTC don't like and the SEC. So Nothing we can do about it. I had a 2 ADR wick on the broker candle last night on UC. Yeah, on Think Markets. Yeah, I mean, see, this is the difference. Look, mine last night was 2 pips. The Armand's was 2 ADR. Yeah. This is brokers, right? How can Think Markets have a 2 ADR candle and me have a 2 pip candle? Because Think Markets saw an opportunity to spread and take people's money, whereas Forex didn't. It's what goes on, isn't it? We know it goes on. You just got to accept it. There's nothing you can do. If you want to access these markets, this is how you do it. If you don't like it, don't trade. End of the story. That's all you can do. Use of predator software is what the problem. What the problem claim is? Predator software. Yeah. You sell that template online. Don't sell template. I sell my indicators and my EAs. I sell, AJ, all on the website. Everything is on the website. A template is just a color scheme at the end of the day. So that worries me, the fact that you said I sell this template. You're looking for a template that makes you money. This template will not make you money. You will make yourself money by learning how this thing moves and how to trade it. Templates don't make you money. Indicators don't make you money. EAs don't make you money. I sell indicators and EAs, and I'm telling you right now, they do not make you money. Learning how to use them, read them, and how this thing works makes you money, right? You can't stick the market reversal alerts indicator on the chart and go long just because it went orange and expect to make money. High probability. That's not how it works. Go and watch all the content on the website. There's a PDF. Start here. I'm going to put this in the copy link address. Why can't I make a link? That's a PDF. Why can't I copy a link? Go and click that link on the website, Position Trading Handbook, right? That gives you everything I think you need to know from all of my content and what order to consume it in. Watch all of that, then make up your mind whether or not this is for you. That will help. Yeah, so predator software, what Franco's talking about, basically is the software that brokers use to tell them where the liquidity lies. So every order you place in the market, your broker has. They have software which shows them price points and the amount of money that will be made by the brokerage when those price points are achieved. So if price gets to here, right, and they make $1,000 if it goes to there, and they make $2,000 if it goes to there. When it goes to there, if they spread it for 2 seconds and pull it back down, they will make $2,000. That's the software. This is not illegal. This is, you've signed a contract with your broker to allow them to do this. Yeah. My order execution at any price deemed possible is what you have signed for with your broker. Predator software in brokerages is not a problem. There's something between predator software usage and prop firm, the way they make money. There's a problem there somewhere. Brokers use this software. Yeah, you go to an FX expo for the industry. Yeah, there's guys standing up on stage demonstrating their software that will make you more money out of your customers. They call us dumb money for a reason, because you put stops in the market. That's dumb money. And it's not the bank stealing it, it's the brokers. You're not stealing it. As I say, it's totally illegal. You can do that. You've signed a contract to allow them to do that. All is a possibility, not guaranteed. Yeah, everything is 50-50. Anyway, I haven't done the analysis, so let's go through the analysis. We've just been waffling this morning, haven't we? For literally an hour and a half. No, nearly 2 hours. Blimey. Right, so New Zealand dollar, US dollar. Again, this there's obviously not a lot of analysis to do at the moment because we're coming out of August and it's all sideways. So if you want to know the fundamental biases, go to the website and look at the fundamentals, the directional bias scorecard. That will tell you what the expected directions are for the FX based on the fundamentals. So there's nothing particularly strong as a buy or a sell at the moment. Euro odd is the strongest buy at the moment, followed by US dollar CAD. Although if oil keeps going up, I don't think that's necessarily true. New Zealand dollar, US dollar is the strongest sell, and New Zealand dollar Swiss is also a very strong sell. Basically, New Zealand dollar Swiss is pretty much the same as the Euro odd in the opposite direction. So those are basically your kind of guides, if you like. But at the moment, as you can see, we're coming out of very, very tight ranges. So what I'm expecting to happen this week is stuff to suddenly get RSIs. I think we're going to see a good number of RSI extensions this week and probably a lot of ADR hits. So I'm waiting for things to kind of set up at the minute. So doing analysis on things is very difficult because this week I would ordinarily be saying, look for support resistance bounces because we're range bound. I'm not sure if this week we're going to stay range bound or we're going to start to make some of these moves because we're coming out of summer trading. So if you take a range bound long here and then look for a range bound long here, this could be when the US dollar starts to power up, we start to go into a strong move. So you would be better off waiting for RSI extensions. So I'm just going to sit. I'm not going to be trading support resistance this week at all. I'm just going to be waiting for RSI extensions to get into some position trades. I'll obviously be trading the DAX and the NASDAQ and everything as normal. But support resistance bounces, you've got to be a bit careful with this week because I think there's a good chance that we might get a lot of breakouts this week because we are in ranges everywhere, aren't we? So the market has got a break at some point. When it happens, it's going to happen. So all the yens we've looked at earlier on, probably about an hour ago. New Zealand dollar Swiss just broken out to the upside. Fairly decent range on that one last week. We're bang in the middle of the range now. Could go either way. Got a propulsion gap, which has been tested 4 times down here. So that is where they started buying from. That held up well. So if we get back down to there, there's potential bounce there. But again, I want to see an RSI extension on it. New Zealand dollar CAD, very difficult. Back of this news, look, off of the unemployment rate last week. Very, very tricky. That is 125 ADR. We've got 100 ADR to the downside. So that support level there is ADR. That's 125 ADR. That's ADR as well. So again, ADR hits potentially for mean reversion opportunities. But again, ADRs, we could see some big, strong moves going in 150 ADRs, 200 ADRs, because the market's going to start to suddenly come to life. Volatility, ATR is all going to pick up. So we just need to be a bit careful, mean reversions. I'll still be getting on the 75 25s. But if you're trading 70 30s or you're trading a faster RSI, like an RSI 14 or something, just be a little careful with your first entries because you could be getting in on a multiple ADR move. So just be a little careful with everything this week. Pound US dollar, got longs on already. Stuck in this, have been stuck in it for ages. Just sideways. So waiting for that to push. No reason why that one shouldn't. Pound New Zealand, range low is last Friday, and we've got that Monday. No, sorry, that's Tuesday's low. So this whole area here seems to be holding. We're pushing up at the moment, up into these highs. Again, bias on this one should be long. Pound is long. New Zealand dollar is weak. So this is just a pullback on this leg up at the moment. So we went into that accumulation, right, and then pushed. We're pulling back on this move at the moment. So we should be looking for a leg up. Whoops, pound yen we've done. Pound Swiss completely sideways, and we're bang in the middle of the range. Yeah, so could go there, could go there. Flip a coin. Pound CAD, again, kind of sideways at the moment. We've got a bit of a contraction going on this one at the minute. So we are contracting. I would expect that to break to the upside. However, if oil is going to continue to rally, we should see some strength coming through in the Canadian dollar, but we're also going to see strength coming through in the pound with the interest rate rises coming. We've got no real news on the pound this week. That's last week. We've got monetary policy report hearings. That's it. We haven't got Bailey scheduled to talk at all. We've got the claimant counts there, GDP. So it's quiet on the pound. So unless Bailey comes out and rallies the market, it's just a case of waiting for the pound to pump itself. But everything pound-wise is up. Yeah, so we want to be looking for longs ideally on the pound, really. Pound odd, same thing, up. We got a nice bounce off of that level there. If we get down to there, ADR 100, 125, we're looking for longs. However, if we're going to continue market structure as we are doing at the moment, we should be looking for that low not to be invalidated. So this could well be the bounce point. We've had an alert on this morning already on the hourly. Yep, so there's your hourly reversal alert. But again, it could just push up into yesterday's high or into last week's high. We don't know if we're going to come out of these ranges yet or whether we're going to sit and wait. So don't forget also the fundamentals are very tricky at the moment for the market, for the banks. They don't really know what's going on with interest rates. The Fed are very quiet. The Lagarde is very quiet for the euro. Bailey is complete radio silence at the moment. So we're not getting any information fed out to us. So gold is on a sell now. I don't know. Is the US dollar going up? You answer the question for me, Macaros. Is the US dollar going up at the moment? If so, gold is on a sell. Apparently, a MFF advisor told an employee, slip them to hell. Forex Factory shows Aussie dollar news, I think, 6 a.m. your time Tuesday. Yeah, so we have got news tomorrow morning, which is the cash rate, which is basically the interest rates for the Aussie. Expected to freeze. The Aussies are not very good at The Aussies are not very good at forecasting at the moment, as you can see. So we had an unexpected result there. We had an unexpected result there. We had an unexpected result there. So of all of the rates, the Aussies and the New Zealand at the moment are the ones that are really not sure what they're doing, and their forecasts are crap. So this could be anything. So if we get a green number or a red number, that is where you really should look at the market moving. So we've got obviously a big drop. We were forecast to increase rates last time and we froze. That's when the Aussies and the New Zealand's been dropping. So that's why the Aussie New Zealand against the yen is down and everything else is up. It's a good gauge, the yen, as to what every currency strength is, because the interest rates on the yen are negative 0.1 constantly. So this one at the moment basically could go either way on Tuesday morning. I've got no exposure on at the moment. Oh no, I've got a long on the Aussie US. I've got long, so I've got a long on it. So it'd be nice if they increase the interest rates for me, but or not. Euro US dollar. Again, US dollar is very, very difficult to predict at the moment. The euro also is very weak off the back of all the interest rate rises we've had. Lagarde is not very bullish and not very bearish at the minute. We're not really getting an awful lot of information out of her at all. She's talking this afternoon. So we've got Lagarde speaking at 2:30. So we might get some guidance out of her this afternoon. But, you know, you can see for the last 2 weeks, there's your high, there's your low. That's the range we've put in for the last 2 weeks, which is basically 195 pips, which is 2 ADR. So we've done 2 ADR in 2 whole weeks, pretty much. Not moving anywhere. So again, we're waiting for a break. The US dollar is likely to be what is going to make the first move because it gets more news than everything else. So we're sitting down at range lows. Obviously, you can see the market is currently reacting. However, that was a massive move we had on Friday, so they may well push into that and it might drop. So that would require US dollar strength. Personally, I don't think that's the right move. I think that is basically the market buying non-farm payroll. They're going to suddenly realize, oh, that isn't going to be what's going to be happening because the actual unemployment rate is what drives the fundamental, not non-farm payroll. And the market knows that, obviously, but Retail doesn't. Most of retail. I suspect that will probably get undone. Lagarde could do that this afternoon. So if Lagarde rallies the euro this afternoon, we could see an ADR move back up to the upside and just put a V-shaped recovery in and undo it. But at the minute, obviously, as you can see, nothing's moving. You can tell by the DAX. Yeah, we had a little bit of a rally. We're not going anywhere now. Symmetrical triangle forming. We're contracting. No direction. Euro New Zealand, sideways again. Been massively sideways on this. You can see the mess this has been. First entry, second entry, third entry, fourth entry, took the fourth entry again. So took that one off profit, took that one off profit, took it again. You know, just in and out, in and out, in and out, constantly in ranges, and got out the whole lot down there. Again, what we were talking about earlier, why did I get out of that trade there? You can see all the TPs and all the positions were there. Why? Look at that propulsion gap. Look at where the market bounced. Why did I put my TP there instead of there or there? Because that is where the market is attracted to. You're going long on this now. Where do you put your TP? There. Because that is more likely where we're going to get to. It could get to there. It could get all the way up to there. But if you want to just get in and get out, make money. Get out with the closest possible spot you think you can get out at. So range bound at the moment. It's putting in lower lows at the moment. So we've got high, low, lower high, lower low. So the market structure is currently bearish. So we should be looking for what next? Lower high, if we're going to continue with the bearish structure. Lower high would be propulsion gaps, and then we would push down to make a lower low. So that would require the euro to have a little bit of a rally, and then it would require the New Zealand dollar to strengthen up. What have we got coming at 5:30 tomorrow morning? Aussie dollar news. If Aussie dollar rate increases, New Zealand will get a rally with it. That will drive the market back down. So if we can get Lagarde running us up to ADR today, that's a beautiful short. If those things happen, we have no idea if they're going to or not. Euro pound stuck sideways. We got the bounce down here. Last entry I had was long there, exited, pushed up from there, but not going anywhere at the minute. Stuck sideways. Bias on this is very hard. These are both longs. A long against a long creates a range. So there's not really any bias on it at the moment. It's coming down. You can see the market structure is short at the moment. So we've got high, low, lower high, lower low, lower high. That is what I would expect to put in. There's no reason why the pound shouldn't be stronger than the euro unless Lagarde comes out and says we've dropped behind a little bit too much. We are going to need to increase interest rates, definitely by X%. We need a percentage from her, which is above 0.25. I don't think she's going to be able to give it. So I suspect that this is still going to be bearish moving forward. But you can get in any direction. I longed it. Yeah, bearish on it. Doesn't matter at the minute. I think if you take an RSI extension to the upside or to the downside as a position, be prepared to be in stuff at the moment still for a couple of days or a couple of weeks. You know, it's the same as usual. We're waiting, aren't we, on stuff all the time. So no real advantage either way on this one. Look at where you are exactly right now. We're sitting there. We could go down to there. We could go up to there. Both of those are ADRs. If either of those are achieved today, you can mean revert it the opposite direction. Euro Swiss, hideous sideways mess. Last entry was there. $84. So yeah, just waiting on this basically to do something. No, it's been this is last month's high and low. We just sideways. I don't know. Wait for it to get down there, ADR, and long it. But the trouble with the Euro Swiss is when the Euro moves, the Swiss moves. So we're waiting for some Swiss franc movement basically to shake this one up. We had the Swiss news this morning on their GDP, which came out as a 0. So they haven't grown, they haven't contracted. All the market did off the back of that news was an A-shaped recovery. Yeah, it's not bullish, it's not bearish. So the market hasn't gone anywhere. Euro CAD, sideways. Bit of a recurring theme here. Sideways has been for a month. Yeah, we're waiting for a breakout of some force in some direction, but which one it's going to be, I could not tell you. So waiting for, there was an entry there, but that didn't trigger. That was at the swap. Marginal entry that was. That was actually probably triggered because of the swap, so it probably wasn't an entry. But yeah, no trades on it. As you can see, last entry was there. In and out, straight into propulsion. Job done. Haven't had an entry since because market's not going anywhere. Euro odd. Again, this one, we've bounced out of propulsion again here. So that's the initial move that started the rally. They then rallied again, added again. They've just added back in to that area. So they want to stay above this area here, above this high. This should really continue this direction. However, obviously tomorrow morning you've got the Australian rates. So this is probably just going to do that today. And then tomorrow morning we're going to go off ADR one way or the other. Don't know which. We'll see what happens with the interest rates. As I say, the Aussies are notorious at the moment for not really having a clue themselves which way their interest rates are going to go. Otherwise, they would forecast it correctly. So nothing we can do. We just got to wait till tomorrow morning. So if you want to get into a trade on this one, you know, it's the same as ever. Flip a coin, pick long or short, and press the buy or the sell button today. You will either be right or you will be wrong tomorrow. There we go. And if you're wrong, scale in, adjust your price, get out later when they undo it all because the market's not going anywhere. CAD Swiss, very large range we're in, but it has contracted down over the last 3 weeks. The last 3 weeks we've been stuck in this little range here. We're down towards the lows. Bias on this one is very hard. Swiss franc moves on as a safe haven currency when the US dollar has trouble. So if we get any problems with the US dollar, we'll get these big moves in the Swissy. But the Canadian dollar, if oil is just going to pull back and continue to rally, we should probably see some weakness in the Canadian dollar to start this week and then a push. So I would be happy actually on the CAD Swiss. One of the few I'd probably be happy taking a support resistance bounce at. That's 125 ADR. So we've got an ADR extension. We're not going to get it today. Highly unlikely because unless Lagarde really shakes up the euro, but obviously Canadian and US markets are shut today. So, but any kind of price action, market reversal alerts down there, pretty good long opportunity. But right now where we are, we're stuck in the middle of nowhere. All the Aussies are bearish. So this isn't the best position in the world. I am hoping we get the Aussies decide to increase interest rates tomorrow. So at the minute, they're forecasting to remain the same. If you look at what's happened to their interest rates, they are coming, their inflation rather, they are coming down at a decent rate. Inflation is still the second highest in the world at the moment of the developed countries, of the main Forex currencies. So they are still in the second worst situation worldwide, apart from us in the UK and the New Zealanders. So the New Zealanders and the Aussies in the same boat. However, inflation is coming down at a decent rate. This is now starting to creep up, unemployment, because obviously of these interest rates going up so high. So that's why they're forecasting a freeze, because this is doing its job at the moment and bringing this down. It's also causing this to go up, which means they want to keep that the same. However, they never do what they say. So I very, very, very much doubt they will reduce it. We're either going to get a 4.1 tomorrow or a 4.35. So if we get the 4.35, we're going to get a rally on the Aussie and the New Zealand. They're both going to hit ADR. We're both going to get good pushes to the upside. If we get a freeze, it will be down to the market positioning, and they will decide whether they want to be long or short. If you look at where we are from a COP perspective on the Aussie and the New Zealand, the market is positioned short on the Australian dollar and it's positioned short on the New Zealand dollar. So it's more in their interest to drop it because they'll make more money. So it's not looking great. We're going to need a positive interest rate rise tomorrow, I think, to rally this Australian dollar. So if this pushes down tomorrow, obviously that's 175 ADR, last month's low. We will have limit orders sitting at that level. Just zoom in, you can see better. Yeah, so we have limit orders sitting at the previous week's low. We'll have limit orders sitting at that double bottom, which is last week's low. We'll have limit orders sitting at last month's low. We've been stuck in a range now for 3 weeks or so. So if we do get that rate come out as a freeze, we'll probably see it push down beyond ADR, and then we'll probably get a reaction off of one of those levels. So I'm long at the moment. My average is up at 150. That was my last entry there, which was, no idea where that was taken, but somewhere, it was taken somewhere around here. So if it pushes down to there, I'll be taking another entry, bringing that average down. If it pushes up, I'll be out of that one there. In fact, what I'm going to do, so ADR is 62. It's going to need to do 150 ADR even to get there. Look, I've taken 3 nice profits off of this and done 1, 2, 3, 4 drawdowns. So I've done 0.6 DD control. I've taken at least 1% out of it. So I might go up to 225 ADR. So I'm just going to adjust targets up to there. So that will close all those positions out. And I'm going to assume that if we can get a big push off of the Aussie, we're going to push up and we're going to find some resistance up here somewhere. But I will look at it tomorrow morning. If I find tomorrow morning we're sitting here and we've done 150 ADR or something, and I'm sitting in $400 of profit, I'll just shut the lot, get out, be done. Because we're just sideways. But the Aussie dollar, obviously having a positive interest rate, can be very easily outweighed by the US dollar having a positive news event. If the positive news event on the US dollar comes out just after the Aussie, this will come down twice as fast, if not just as fast. The first US news we've got is PMIs on Wednesday afternoon, half an hour after the market open. So those are the ones I'll be looking at. Right, so that's Aussie US. Aussie New Zealand, always sideways, always sideways. Had one trade on this in the last month. Straight in, straight out. Range high, range low. Intermediate, range high and low. You know, you can see the lines on the chart. Going anywhere. So again, tomorrow this is either going to go up to there or we're going to be down here somewhere. So you could short it up there and you could long it out of this propulsion. But obviously bear in mind tomorrow's fundamental news. If the market suddenly decides, yep, we what might happen tomorrow is we may get an interest rate rise from the Australians. They may then come out in their monetary policy statement and say, this will not be the last. If that is the case, we could get a sustained one on the Australian dollar and we'll be flying out those highs. Yeah, so we'll pop. We'll just keep rallying. Yeah, we'll wait and see. But if that happens, the New Zealanders will probably increase their interest rates as well, although they are really stuck at 5.5. It's going to be very hard for them to keep increasing that within unemployment going up and that coming down at that rate. So I suspect probably we might get a rise on that tomorrow. That will become terminal rate. They will freeze next time. And those Aussies and New Zealands will kind of go into a bit of a range and will be pushed around by the other currencies as their news comes out. So there's no real strength in them basically at the minute is what I'm kind of trying to say. Aussie dollar Swiss coming down obviously because the euro is stronger and the Swiss franc is stronger than the Australian dollar. No reason why that shouldn't change unless we get a massive fundamental shift tomorrow on the Aussie. If they come out with interest rates at 4.1, carry on down. So this is a pullback at the moment, which is a 50% retracement on that last leg. So absolutely could come down from there, challenge those lows. And Aussie dollar CAD. I've got a sell limit, which I put in earlier. I'm glad I came here and saw that because I don't want that in the market. I was just putting that in to demonstrate how to place an order. So yeah, so this one, it's just going nowhere, is it? So we're on a pullback. That's really the leg. I mean, you can't even pick a leg on this. So market structure is kind of there at the moment, but it's really uneven market structure. It's just, you know, there's nothing clear on this chart at all. So Canadian dollar would expect it to rally on oil. Therefore, that should be down. If the Australian dollar comes out tomorrow at 4.1, much rather short it. If it comes out as a high, I'd be looking for a push up into propulsion and shorting it out of there. By that time, we'll have an RSI extension to get into. And then we should not come and invalidate that high. And carry on that way. So there's all the pairs. Obviously, there's nothing clear anywhere because we're coming out the back of the summer trading. Thanks for the subscription, Brutus. Welcome aboard. And Max R Us, I think, I'm not sure if I said. Thank you for subscribing. Will you continue with 3 days a week? Yeah, at the moment. So at the moment, live rooms are going to continue at 3 days a week. Definitely this week. What I've decided to do is I'm going to wait for adjusting stuff over here. One sec. I'm going to wait for the market to pick up. So at the minute, we are still quiet. It's obviously a bank holiday today. So I'm going to do Mondays, Wednesdays, and Fridays as usual, morning session and afternoon session, until the market starts to pick up a little bit more. So, and then I'll decide what to do. But the thing with the strategy, with a position trading strategy specifically, you don't need me to come and analyze the charts every day, because I'm not giving intraday analysis. That's not what I do. Yeah, the positions I'm in are multiple day holds, multiple week holds a lot of the time. So yeah, if I say something here, a week later I'm saying the same thing. So the fact that I don't say it on Tuesdays and Thursdays doesn't really do anything. So I don't really see much point in doing 5 days at the moment. I've also got a lot of stuff I need to catch up on, and a lot of stuff I need to do because I was off last week. So I'm going to do the normal 3 days this week. And then I'll have a think about whether or not to go back up to 5 days. I really want to get what I want to try and do, because we've come out of the holidays and I've been off with the kids and doing things. What I want to do is spend a few days solidly analyzing and working on the new EA that I'm building for backtesting the indices. And I want to put some solid hours into getting some testing and results done on that, and some tweaking done on it. There's all sorts of stuff I want to do on it. Problem with doing live rooms 5 days a week is I tie up about 4 hours of my day, which I can't spend doing analysis. So I want to get, if I can get 12 hours a day twice done in a week, that's for me amazing, because I can just fly through analysis and get everything done on the new version of the EA that I'm building. So I need time, basically. So that's the plan at the moment, but obviously plans change. But if this thing just keeps flickering around like this, yeah, for the next week, I'm going to be saying the same thing every single day. So there's no point. Do you think we'll get another percentage hike? Yeah, in the Aussie dollar, yeah. I think they will. They're behind. If you look at where we are, look at the rest of the world. Yeah, Canada is 5. The pound is 5.25. New Zealand is 5.5. US is 5.5. Euro is 4.25. They are 4.1. They have the second highest interest rate in inflation level in the world at the moment. They should be high. They're not. They've left it too late. I've been saying this for the last 6-8 months. I've been saying these guys came out the gates way too slow, and they froze way too many times, and they let this thing get way more out of control than everybody else. They are now behind. And the whole balancing act with interest rates, inflation, and unemployment is, when this thing goes up, you need to get this up fast to get on top of that before this starts to rise. Because as soon as that starts to rise, you cannot use that anymore. And if that is the only control you have over inflation, you are screwed. Yeah. They came out way too slow. We came out in the UK way too slow. Look what it's cost us. Yeah. The slower you increase your interest rates when inflation is flying as it has been, the harder it is for you to stop increasing interest rates, and the more pain and pressure you inflict on your population. Yeah, there are people now living in back gardens in people's houses in tents in the UK because they cannot get a mortgage. Yeah, because we've had negative interest rates and zero interest rates everywhere during COVID, and everybody's gone, brilliant, I can now get a 350 grand house, whereas I can only afford a 250 grand house. But because the banks have lent me the money, it's brilliant. Now you're coming out of your fixed mortgages, you're jumping into these rates, 5% higher, you can't afford it, because what have you not had? A pay rise, because GDP has been dropping. Companies have been struggling. They've been laying off staff. Unemployment's been going up. So this is becoming now the next housing bubble. So we're about to get a burst in the housing market. When that happens, they drop this fast, but they can only do that if this is coming down fast. So this is one of the reasons why it's very difficult for any of the banks at the moment to give you any indication as to what they're doing with interest rates, because we are on such a knife edge at the minute. Sorry, one sec. We're on such a nice knife edge at the moment with these interest rates. We keep saying we're hitting the terminal rate, we're hitting the terminal rate, we're hitting the terminal rate. They keep creeping it up and creeping it up because they can't do anything but creep it up. Now they're going to struggle to creep it up because everybody's unemployment is going up. When that's going up, you have to stop, because if you make this go up further, people start to lose their jobs. Obviously, that's what unemployment is, which means they then can't afford to pay their mortgages. Yeah. And they can't afford to pay their mortgages anyway because those interest rates are so high. So that leads to a drop in your GDP, and inflation then starts to skyrocket. And it just all becomes this spinning top, which basically goes out of control and you can't get on top of it. So something has to give. The thing that always gives is the housing market. And as soon as the housing market pops, everything starts to drop and recover. And the problem with that is it makes your entire population poorer. And people start to go into negative equity on their properties. So they have loans bigger than the value of their properties. And it just doesn't work. So they've got to stop this. The problem with Aussie is they've done it too slow. They've got to increase this. So they are causing a big bubble. And the US is in exactly the same spot at the moment, except theirs has got down to a manageable rate. 2 is the target across the board. 2 is always the target, apart from the Swiss. They're always lower. But so they're getting there, which means that they are terminal rate. These guys, however, aren't. So I think there's more to come. There's more to come on the euro. There's more to come on the pound. There's more to come on the Aussie, I suspect. Whether they do it this time or not, we don't know. They're saying they're not going to, but they've said that before, as I've just shown you. Yeah. So they said they were going to do it last time and they didn't. Look what's happened to the Aussie dollar, right? If they don't do it this time, that's just going down further. And again, they can't do that. And this is not just, as Frank has just said, this is not just an issue in Australia. This is an issue worldwide. Housing bubbles are popping and starting to get to points where there's not enough houses. Everybody that was in the rental sector has stopped renting their houses out because mortgages have gone up. So it's become the rent can't go up anymore because people can't afford it. Your mortgages have gone up, and as soon as that mortgage goes up above the level of rent, you can't pay the mortgage. Therefore, it becomes no point in having the property. So they sell the property to liquidate their cash. Then people who can't get mortgages have to go into the rental market. But because everybody that's been renting has sold their properties, there aren't any rental properties out there. And this is where people are living in people's back gardens. And this is how it starts. This is how it started last time. This is how it started the time before that. And this is how it's starting again. It's going to be a pop. And when that happens, there's no prediction as to which way before you ask. The FX market doesn't work on housing. So the markets will go where the markets will go. The markets are driven by interest rates. But if that housing bubble starts to burst, the interest rates will come down. And it's when the interest rates come down, that devalues the currencies. So it's whoever drops fastest will be the weakest. Often it's the US. And that kickstarts the stock market rallies as well. So, but it's all teetering on the edge, yeah? And it has been for a couple of months. So we will see. But we don't trade that long term. So, it's more of an investment time frame that we're looking at on that. Are you back to using the 21 or still on the 14? Never been on the 14. I'm always on the 21. I was monitoring the 14, not trading it. I've always traded the 21. Didn't bother to go to the 14 this time. I did last year. I made more money last year. I made 19% last August. I only made 7 this time. So I should have gone to the 14, but yeah. Thanks for subscribing, Muzi. Welcome aboard. 3-day weekend ending. Banks could crash tomorrow. Wells Fargo is going down. Is it? Yeah. Tomorrow, I think you're going to find is going to be a busy day. I think today is the calm before the storm. Beginning of September, market's going to start to pick up. We've got no trading today, so I think tomorrow you'll find we'll get some decent movement across the board. Pound's doing all right today. There's a few things on the move today. No ADRs though, apart from that one, which isn't really an ADR, but everything else is kind of stable, so we will see. But yeah, so that's a pretty good trade on the DAX this morning. I'm very happy with that. Should have taken the pre-market, but pre-market would have been a much nicer. That would have been an easy 2R today. But I got a grand out of it, and you know, I don't think you can ask for much more than that today, really. On a bank holiday, I'm happy with the result. Right, I'll leave it there today. I'll be in the Telegram group if you need anything. I've got a lot of stuff I need to catch up on from being away for a week, and I want to get more analysis done on the opening ranges. So I'll be back on Wednesday. So there's no live room this afternoon because obviously there's no indices to trade this afternoon. There's no point in doing analysis on the FX market because it's the same as this morning. So this morning's replay basically is a very long-winded analysis anyway because I was waffling so much. My Forex funds will keep an eye on that. I'm not going to get any new prop accounts this week. I don't actually need them at the moment, although I should get some evaluations started. But I am trading my own capital on the indices at the moment, which is going well. And I had a really good, had a decent support resistance month last month, although I've now got capital tied up. So I think what I'm going to do is just leave the prop this week. I have a feeling we're going to see a little bit of a house of cards starting with prop firms. So my advice would be watch these props. I might actually do a little bit of analysis and just have a look at all these prop firms basically and just see who is using their own capital and who is using third-party brokerages. You're going to be safe. This My Forex Funds issue, you're going to be safe basically. Why is Audacity Capital not loading? You're going to be safe basically if they're using a third-party broker. Oh, that's weird. That link's not working from the website. I'll have to look at why that's not working. This Audacity Capital, this is what I was talking about earlier. A traditional proprietary trading firm. You rent one of these chairs for somewhere between 2 to 10K a month. That's what prop used to be. These guys have gone online, but these are proper. These guys based in London. These are proper proprietary trading firm. But even so, I don't know how their funding works with. I would imagine they're using their own brokerage because they do actually fund their own chairs. So it's something that needs to be looked into. So if you need to get a new prop firm, I hate to say this, any prop firm using 8cap is safe because 8cap is a third-party broker. There you go. Trading conditions are awful, but that's what you got. So we'll see. I'll have to check why that link's not working. So yeah, so I'll be back on Wednesday. You don't want to be in a cubicle, no. It is good being in a cubicle. Basically, what we've replaced cubicles with is Telegram and Discord. Yeah, Because when you're sitting in a cubicle, sitting next to other traders, you bounce off other traders. The problem is you get distracted by other traders as well. Someone sitting over there goes, done 15K on US dollar yen. You're like, how? Yeah. All of a sudden, whatever you're doing is, how did he do that? He just happened to be hitting the right button when that thing moved in the right direction. That's what happened. So it's very distracting as well. But anyway, but yeah, just be careful with prop. Obviously, we don't know what's going on with the industry. This could be the start of an industry-wide crackdown that could see a lot of these firms disappear. We'll see. CTI, actually, I think Citi have their own brokerage as well, don't they? I've got a feeling Citi use their own in-house brokerage as well. I don't know. We need to look into it. Just be careful. Right. Anyway, so I'll be back on Wednesday morning for the DAX. Anything you need, Telegram group, I will be in there. And as I say, next live will be in on Wednesday morning, and then Wednesday afternoon. Sorry. I need to change that. I've actually scheduled this one for tomorrow for New York. So it'll be Wednesday. Wednesday morning, Wednesday afternoon, no live rooms tomorrow, no live room this afternoon. Okay. So have a good one. Anything you need, ask away in Telegram. I will be in there constantly. So other than that, have a good week. Good luck with the indices tomorrow. And I will post any updates on my trades in the Telegram group as usual. All right. So have a good one, and I will see you guys on Wednesday.